inflationary move. The thing is, then of course, Russia invaded Ukraine. The long story short, most of what I've just said remains completely valid. The Fed still has to raise rates because all of that stuff about inflation existed before the Ukraine crisis. The thing is, the Ukraine crisis has dramatically increased the risk of inflation and taken the causes of that inflation much farther, pulled those causes much farther from the control of central bankers. And we see this in all sorts of commodities that are going through the roof. And there's no short-term solution to this. There really isn't. I'm not going to dive into the geopolitics of this, but there's no short-term solution. Russia's pariah state would not reverse should there be some sort of magical ceasefire tomorrow, which I very, very much doubt. And so inflation will be much stronger for much longer. I'll go into that in a little bit more detail in a moment. Fiscal priorities have changed. This is also important, right? The big thing was this shift from really accommodative to tightening. And now, especially in Europe, fiscal priorities have changed, right? What matters in Europe now is supporting the war in Ukraine. And that's going to involve, euro bond printing and things like that. This is stuff we wouldn't have been talking about 3 weeks ago. It's very different. And of course, volatility in the stock market is way up and stocks are down, and a snowball effect is possible. I mean, all of the big financial crises that we've had in the last while, they all have to do with leveraged collateral, right? Well, commodities are collateral. And then all of the volatility that's associated with this kind of move, these things, volatility and leveraged collateral, can absolutely come together to create a snowball effect. And so that's a risk as well. Okay, so yes, Russia invaded Ukraine. The biggest impacts from a financial perspective, I'm not meaning to minimize the other more important impacts of the Russian invasion, but what I'm here to talk about is macroeconomics. So from that angle, of course, what matters is energy and commodity prices, which are way higher. And, the basic question is, how do you replace what Russia contributes, especially to Europe on the oil and gas front? If you look, thermal coal is trading higher than metallurgical coal. That never happens and is a really good suggestion or example of the impact that this dramatic change in the world is happening or is having. Other commodities that I think are really important to watch are food and fertilizer. I mean, the wheat chart has been all around the news. It's hard to miss the fact that the price of wheat has, shot up, more than doubled since this invasion happened. And fair enough, Russia and Ukraine are the breadbaskets of the world, but they're specifically the breadbaskets for the Middle East. The last time we had a geopolitical event that caused dramatic food insecurity, we ended up with the Arab Spring. Was that a direct line? Pretty direct. Obviously, there were other reasons that caused the Arab Spring, but the kinds of ramifications that this could have are very significant. It doesn't help that Russia produces between 10 and 25% of the components that go into fertilizer. So not only is the place where the wheat is grown being bombed, and therefore seeds are not going into the ground right now when they need to be, but also fertilizers are going to be much less available globally. And they had already been under a supply squeeze that had pushed prices much higher. That squeeze is significantly squeezed itself now. I think we're going to see, I think we've only just seen the very beginning of a price move in fertilizers that will only amplify those sorts of food and fertilizer impacts. Then, of course, there's the really Russian metals. We have nickel, which is its own talk. It's a crazy scenario in the nickel market, some of which is fundamentally justified. A lot of it is speculative squeezing of a massive short position by a Chinese trader, but Russia does produce a good amount of the world's nickel, and so that's happening. Palladium is way up. Aluminum is way up, and that has a lot to do with natural gas prices. And that natural gas is what is how aluminum smelters in Europe are powered. Zinc is way up, which is a bit of an odd one to understand, at least the significance of the move. But there's real impacts on some specific metals from Russian availability. And then there's this fiscal focus that I mentioned, right? So governments had been focused on reining in inflation while supporting post COVID recovery. But now suddenly, especially in Europe, we have a real focus on transforming energy sources, supplying big increases in military spending, helping citizens with what are and will continue for the next year at least to be insane food and energy bills. And then, of course, just straight up relief, significant relief that's needed, and aid for Ukraine. All of this, everything that I've just talked about, comes together to mean that we have a lot of inflation ahead. Inflation insanity. Is it hitting 10%? I don't know, but it's really up there. At the same time, central banks will have much less control. I mean, had they control over it before? That's a debatable topic, but this is not supply, or this is not cost push inflation. This is supply squeeze inflation. And so inflation, central banks have a lot less. Would just raising rates really impact that? Well, less for sure, but they nonetheless need to go up. And then the threat of recession is much higher for all of these reasons. So rate hikes are harder to sell. So we're going to get rate hikes because we have inflation insanity, but the rate hikes are going to be a harder sell. So I think in terms of sentiment and momentum, they will have more impact. That is all still bluntly good for gold. Gold gains with rate hikes, especially at the beginning of a rate hike cycle, and when real rates stay negative or potentially go more negative, which is the situation that we're in because inflation is so strong. I think we also still have investors, and more so now, shifting from growth and speculative to value. That was already underway, like I mentioned, and now I think it's more underway. Specific to the metals sector, we definitely still have a lack of exploration spending by majors for the last decade. That doesn't change quickly, which means that they have to buy projects. Now, I get that the trickle-down effect of investor interest feels like it's taking forever, right? We're getting these dramatic moves in metal prices. The very juniors in the space aren't really getting a lot of benefit from that. It will come. I mean, I think that gold is going to get back above $2,000 soon and is going to stay there. Lots of people throw around different numbers, 2050, 2100. If gold gets to that kind of level, then I think you'll sort of see the taps turn on and investor interest will really start to move down. I get that it feels slow right now, and that's hard for investors, but be patient. It will happen. The other thing that hasn't changed is the green energy revolution, right? Sure, a recession would slow that, but it is happening. And that paradigm shift in metals demand means a lot of metals that are in deficit a few years out. I mean, nickel is just a standout in this space. No amount of new capital can create enough new nickel in the next few years to supply those needs. Rivian, that car company, the EV car company, they're the latest to say we need to move away from more conventional lithium batteries because there isn't enough nickel out there. So they're moving to the lithium iron phosphate batteries because they don't think they're going to be able to get enough nickel to make the batteries that they need for the EV revolution. This hasn't changed. These supply dynamics that are shifting dramatically in a bullish way for metals haven't changed despite all of the chaos. And the fact that gold is straight up a safe haven in times of uncertainty absolutely hasn't changed. We have seen that play out very clearly over the last 2.5 weeks. Of course, it has stepped back from hitting whatever it did last week, 2040 or 2060. But that hasn't changed. There's all the reasons in the world for investors to still invest in gold. And so Russia has reset fiscal priorities, energy pathways, commodity prices. This is not short-lived. There's no quick solution to this. Even a ceasefire tomorrow would not reverse the changes that we've seen. The main outcome is that instead of topping, inflation is going to ramp up higher from here. This will likely lead to significant food insecurity and likely recession, stagflation. We'll see how the details of that play out, but there's really significant ripple effects from this. Nonetheless, a lot of metals, copper, nickel, uranium, silver, PGEs, their fundamentals are strong enough to survive whatever correction comes their way because of that green energy revolution. Within this whole context, the Fed was already walking a tightrope before the Ukraine crisis, and now the Fed basically can't win. They have to raise rates, but inflation is out of control, and pressures to not hike are higher. So they're walking a real tightrope. They will raise rates Gold rises with rate hikes. Gold rises when safe havens are needed. These things are all underway. So I'm pretty bullish about the outlook from here, even though, of course, I wish that these newer forces did not exist. I will add one small comment at the end of this, which is that I also think that a major bull run in uranium is already underway. I could spend another 10 minutes talking about the details of why I think the Russian invasion of Ukraine is catalyzing that to happen faster. It has to do with how we upgrade yellowcake and turn it into nuclear fuel. A lot of those facilities are in Russia. The fact that they are now unavailable to utilities, essentially, I think will pull forward the contracting cycle that had started. So I think the impetus for uranium prices to move higher arrived with the Russian invasion of Ukraine. A $6 price move in one day last week in the price of uranium, I think, stands behind that statement. So that's a lot to spit out in a short period of time. Hopefully that was helpful. If you have any questions for me, I'm easy to find. And with that, I would love to wrap it up here so we can move on with the rest of the session.
Hello, my name is Richard Osman. I'm the interim CEO of Element 29 Resources. The company is a copper-focused junior resource sector company with assets in Peru. The company is listed on the TSX Venture Exchange as well as on the OTCQB exchange in the US. It also has DTC eligibility. The company itself gets its name from the periodic table of elements, where copper is actually atomic number 29. So indirectly, it sort of says it's a copper-focused company. Next slide. Here's a copy of our disclaimer. I won't read this in full, but you can go to our website at e29copper.com to get more information on the company, as well as to read the rest of the disclaimer. Before we get into the company itself, I'd like to just give a little bit of a summary of why we're focused in Peru. Mining makes up about 60% of Peru's exports and about 13% of its GDP. It's the second largest copper producer in the world, and it's also the second lowest copper producer globally. The diagram on the right was put together by CRU, and it sort of shows the cash costs for operating in 5 of the 6 largest copper producing countries in the world. And you can see actually Peru is considered the second lowest producing country out of those 6. The other thing that's really worth mentioning is that Peru is also very low cost in the way of exploration. The cost of holding ground in Peru is about $3 a hectare, which is probably one of the lowest, if not the lowest, in all of South America. And the other thing I would mention is that mines still are getting permitted in Peru, even though you hear lots of noise coming out on the political side. We are still seeing mines such as the Coriani deposit owned by Bear Creek just got recently permitted in December of last year. Getting into the company specifically, Element 29 was actually focused on 2 high-quality copper projects in Peru with excellent potential for growth, resource growth, and those projects are Flor de Cobre and located in southern Peru, as well as Elida, located about 200 kilometers north of Lima. Both projects have well-mineralized copper intercepts from previous drilling, and I would say they're strategically very well located at low elevation and near infrastructure. We have a very experienced leadership team with lots of exploration experience in Peru, as well as operational experience in Peru. We have a very tight share structure of very supportive and strong and diverse shareholder base. And we're very much catalyst driven for our 2022 work plan, where we have initial resource estimates and engineering studies planning to be completed at Elida. And we also have some historical resources that we're looking to validate at our Flor de Cobre project. On the leadership side, I won't go into this in too much detail. I would probably like to highlight Paul Johnson, who's our VP of Exploration. Paul was the regional chief geoscientist for all of South America with Teck Resources. Paul's worked on some of the largest copper deposits in the world, including QB as well in Relincho in Chile. He's also explored for copper in Indonesia, Australia, and China with Teck as well. So we consider Paul a porphyry expert. I would also like to mention Ricardo Lebeau. Ricardo is a mineral economist, and he's worked in the mining sector for quite a long time with some large operators in Peru. He's also worked as the Vice Minister of Mines under President Kaczynski. So he's very well connected and has a strong network of being able to get things done in Peru. Looking at our share structure, currently Element 29 has 79.8 million shares issued, outstanding, and we have about $7.9 million cash in the bank, which is more than enough to complete our current drill program at Florida Cobre. Within that, management own about 7% of the company. We also have RCF, the Resource Capital Fund, in there, which have a 5% ownership, and we also have an institutional investor, Polygon Global Partners, out of the UK, which have an 8% stake in the company. Getting directly into our projects, the Elida project is 100% owned by Element 29, and we have close to 20,000 hectares of ground stake, so lots of room to continue to explore that project, as well as to develop the project with lots of space for infrastructure. The project itself was discovered by Globetrotters Resource Group, a private junior resource sector company, and these projects were actually spun out of Globetrotters into Element 29 back in 2018. And initially, the project was optioned to Lundin Mining in 2013, and they completed a 10,000 meter drill program in 2014 and 15. And then the project was returned to Globetrotters, and at that point, we felt it was time to put it into a new junior resource sector company along with our Florida Cobre project. But Lundin walked away from some really good intercepts of holes mineralized, 500 meter holes that were mineralized from top to bottom, and getting economic grades throughout. The real target in the Elida project itself, we're looking at at least 250 to 500 million tons of over 0.5% copper equivalent. It's a large system. It could even be potential for even more of a sizable deposit. And again, as mentioned, it's very strategically well located at low elevation. The project itself is located roughly 200 kilometers north of Lima. You can access it by the Pan American Highway to the port city of Barranca, and then you can travel about 85 kilometers in from Barranca to the project along a partially paved and gravel road. On the diagram, you can see the Antamina mine, and the green line is actually the Antamina pipeline coming down from the high Andes. And the anchor to the north of Barranca is actually the Antamina port. So Elida is roughly close to 50 kilometers away from tapping into all of that infrastructure. You can actually also see the location of a hydroelectric power station that generates 45 megawatts of power. It's about 15 kilometers away from the project. We have a really good, power grid in the area as well, and we have a very skilled workforce in the region, particularly in Barranca. And the project itself is located at a 1,600 meter elevation, which is very low compared to some of the other porphyry deposits such as Antamina and Toramocho, which are well over 4,000 meters elevation. The diagram on the right sort of shows the geology, a bit of the geology of the project. The actual hydrothermal alteration system outlined in red, which shows the phyllic alteration of the system, about 2K by 2K in dimensions. It forms a line of contact between the coastal batholith in Peru, as well as the Casma volcaniclastics, and siliciclastic rocks. You can see that the project is made up of basically 5 porphyry targets, of which Lundin drilled 18 holes, which you can see outlined in black, and then Element 29 came in and drilled an additional 4,400 meters of drilling in blue. And the real main purpose for the drilling was to get to an initial resource estimate in the Target 1 area of the project, of the Elida project itself. And some of the highlights from that, our last hole, which shut down near the end of the year last year, had 909 meters of 0.55 copper equivalent grades. And within that, starting at bedrock surface, we had a 340 meter intercept of 0.67 copper equivalent. So pretty good grade starting from basically bedrock surface and continuing down. Here's a section through that hole, 25, and you can really see the hole is mineralized pretty much from top to bottom as soon as you get below the colluvium. And that cluvium was unconsolidated, so you can basically just scrape it off and you're right into, 0.5% copper. You can actually see, the first 340 meters have a 0.67 copper equivalent grade, which runs 0.5% copper, 0.036 moly, 4.3 grams per ton silver. And we also would like to note that the arsenic grades are actually quite low in the mineralization. So we expect to be able to generate a nice clean concentrate. And the other thing I would note is that the moly grades are roughly twice what you see in most porphyry systems. So if you have to put in place a moly circuit, then you should get really good recoveries, and probably double what you'd expect from most typical porphyry systems. Moving on to the Florida Cobre project. This project is made up really of two porphyry centers, one called Candelaria, which is a 127 hectare piece of ground that was acquired by Globetrotters from a private Peruvian mining company that's family run. This project was actually acquired from the family back in 2016 or 17, somewhere in there. And the project was actually drilled back in the mid-90s by a junior called Rio Amarillo, who optioned the project to Phelps Dodge. And they outlined a 57.4 million ton resource of 0.67% copper as a supergene enrichment blanket, which means that it's a leachable copper resource. That's pretty exciting in that, there are very, very few of these left in the world that haven't been explored and mined and developed and mined. What's really neat is we've actually just started drilling on this project, and some of the holes we're going to be following up to validate. We need to validate that resource because it was done back in the mid-90s to get it to a 43-101 compliant level. The hole that we just finished had a 272 meter intercept of 0.92% copper, starting down at 78 meters depth. This included 116 meters of 1.4% copper secondary enrichment, followed by an additional 156 meters of 0.58 copper as primary sulfides in the hypogene mineralization below the blanket. The project itself is extremely well located in the southern Peru copper belt, which is one of the top mining jurisdictions in the world, and the project is actually situated very close to Cerro Verde, and which is one of the largest copper mines in the world as well. After acquiring Candelaria, we had an opportunity to stake an additional 1,800 hectares continuous with the Candelaria concessions. And we feel that we've also made another porphyry discovery, which we call Atravesado, on that new ground. And that's located roughly about 1.5 kilometers away from Candelaria, and it's never been drill tested. So we're pretty excited about that as well. You can actually see the location of the project itself. You're about an hour and a half drive from Arequipa directly to the project. And as mentioned, you're about 26 kilometers away from Cerro Verde, which you can see to the northwest, and about 6 kilometers away from the Chapi mine, which is owned by Nexa. And, we think it just forms part of that main alteration system continuing through there. The diagram on the right shows the location of the Candelaria Porphyry Center, which is along that small group of claims that's sticking out to the southeast, and that's where we're currently drilling. We already have the permits in place to do that work, and we've just completed hole 1, and we're already on to hole 2. Additional with that, we staked a large chunk of ground, as mentioned, which we call Atravesado, and we did some geophysics as part of the qualifying transaction, and did some mapping and sampling, and we feel that we've outlined the porphyry center in black to the on that area where you can see the geochemistry anomaly as well. So we're pretty excited, and we're currently in the process of getting permits to actually do drilling in that, hopefully starting in early 2023. This is a section through the Candelaria Porphyry Center, and it sort of shows, how the enrichment blanket is set up. So the enrichment blanket itself actually forms from the leaching and erosion of the porphyry above, and then that copper is actually transported vertically down in sort of these highly acidic solutions, and then it sort of forms a blanket that sort of sits on top of the porphyry itself, which is highlighted in pink. And you can see in this diagram the green histograms along the drill holes and actually show the copper grades. You can see how the blanket sort of forms this sort of sheet-like flat-lying body, sort of sitting along what we think is the paleo water table, where you actually get a sort of a redox reaction where the copper is actually precipitated as a solution along that sort of boundary, and you can actually see where it's actually leaking into the sediments on either side, which are highlighted in pink. But what's really neat about this project is that, underneath that enrichment blanket, there's been very little drilling, and there's really good opportunity to significantly expand the resource base by testing the primary copper sulfides within the hypogene system below. So that's basically it for the project. So really getting into our work plans for 2022. We're going to continue permitting our Atravesado project or target center, porphyry center, and we've already started drilling at the Candelaria Center in Florida Cobre. We'll be getting news out probably within the next 3 weeks once we get assay results back. We're planning to start metallurgical work on the core to get a sense of what the recoveries are, particularly for the leachable ores in the enrichment blanket. And we're going to move the project towards a PEA starting by the middle of the year, hopefully. At Elida, we just finished putting our news out in January. We are in the process of putting together an initial resource estimate, and we've already started some metallurgical studies. And we're going to continue to essentially work on putting that initial resource estimate out by Q3 of this year, and hopefully get in to do a phase 2 drill program at Elida in the second half of the year to continue to expand the resource base at Target 1 and also to test the Target 2 and Target 3 porphyry centers at Elida. So why invest in Element 29? Well, we have great projects that are located in a low-cost, low-risk, jurisdiction, which is, the second largest copper-producing country in the world. If you're serious about copper, I think you have to be in Peru or Chile as an operator. We have a really qualified leadership team with lots of experience operating and exploring in Peru. Our share structure, we feel, is aligned with, our management is aligned with a strong and diverse shareholder base. And, we have a really well-established work plan for this year where we hope to get, initial resource estimates on the book for both our Elida and Candelaria projects. And that's it. Thank you very much.
Hi, everyone. My name is Brett Richards, and I'm the CEO of Goldshore Resources, and I'd like to walk you through our presentation today. I draw your attention to our disclaimers and forward-looking statements. They're on our website, and they can be found at goldshoreresources.com. Goldshore is a fairly new company. We're under a year old. We acquired the Moss Lake project from Wesdome in 2021 in January. For $52 million, $12.5 million in cash and $19.5 million in shares, which were concluded on closing the transaction on May 31st after the approval by the TSX. And we were admitted for trading on the TSX on June the 4th. So a relatively new story. There are $20 million of share payments over a number of milestones over the forthcoming years payable to Wesdome. And that all adds up to $52 million. What we have, though, is the Moss Lake project has a 4 million ounce historic resource. And we've put together a top quality kind of management team and board to help drive a deep understanding of this to our collective network of investors, both retail, institutional, family offices, etc. So we put together a strong team of people to be able to do that. The project is located in northwestern Ontario, so extremely low risk jurisdiction. And as I said, we have 4 million ounces of historical resource, of which lies 2.5 kilometers of that resource lies on a 20-kilometer known mineral trend on the project. We've commenced a 100,000 meter drill program, which will go over the course of 2022. And I'll speak a little later on in this presentation about project economics and the historic PEA that was done in 2013, updated by Wesdome in 2020. But the takeaway here is this is a project that could go into production today. We've decided to utilize our knowledge of the size and scale of both the large land package we have, but also we're trying to make this the next tier 1 asset in Ontario. And by tier 1 asset, I mean 10 million ounces plus, 10-year mine life plus, large annual production profile of greater than 500,000 ounces, and lower half of the cost curve being around $900 today. So that's our goal. Our goal is to identify Goldshore Resources and the Moss Lake project as the next tier 1 asset in Ontario. We have assembled a strong team of people with tremendous track records. I've been in this business for 35 years, and it all starts with people. So I've put together a team of people. Pete Flindell, who is our VP of Exploration, has been with me for almost 20 years now on my last 10 projects. And we've come from a base in our early career of working for major mining companies, understanding the needs of a major mining company, and then branched out into various stage exploration, development, and operating companies throughout our career. I was one of the founders of Katanga Mining, whereby we took the Komodo project from a $25 million company to a $1.8 billion takeout by Glencore. We did our early shareholders 86 times money. Went on to run a company called Avocet in London, and was also the CEO of Rocks Gold for a proxy battle led by Sprott. Pete Flindell was with me at Avocet, but he's also been with me on a number of projects, primarily in Africa, over the last 10 or 12 years. And Pete is stationed up in Thunder Bay. Our CFO, Marlis Yassin, is also the CFO of another company. She is a part-time assignment. This is our executive group. We keep it lean, we keep it mean, and we keep our costs and our overheads down. But we've assembled a board of known CEOs with known track records, and again, with large networks where we can lever the leverage of everyone's investor base, investor followers, retail followers, both and institutional followers, and also on social media. So these are all CEOs in their own right. And we also have Victor Cantor, who is the CEO of Amex, and Joanna Pearson, who is with Endeavour Mining. And then we have 2 very high quality people from Wesdome who have been appointed to the board as a result of the transaction. But the depth of our team keeps on going. Our strategic advisory board is led by David Garofalo. David needs no introduction. He was the CEO of Goldcorp for many years and now is the CEO of Gold Royalties. And again, him and Craig Perry and Brian Sluserchuk and Leo Hathaway, to name a few, these are all gentlemen who have tremendous track records, whereby as colleagues, I use their collective network to market the awareness of Goldshore. The project is in Northwest Ontario, as I stated, and it's very similar to other projects out there: Detour Lake, Cote Lake, Canadian Malartic. These are low-grade bulk tonnage deposits, and Moss Lake is very similar to that. Although we're just over a gram a ton right now of gold, others are under a gram or over a gram, but these are kind of large, what I call earth-moving exercises. Our mineral resource statement shows 1.5 million ounces in indicated and 2.5 million ounces inferred. Again, historical resource will be validating and building upon. There's been a lot of history at Moss Lake. There was an operating mine in the 80s and closed in 92 because of the copper price, run by Xstrata. And when Wesdome earned in 2014, when they owned 100% of the project, they bolted on a couple of properties, the Hamlin Lake property and the Coldstream properties, which are big copper expressions at either end of our property, which will provide some optionality as we get through our drilling program and understand the meaningfulness of these. As I said, we have an extremely large land package, about 45 kilometers toe to toe. And as you can see, we sit on Highway 11, which is Yonge Street in Toronto. I can get on Yonge Street in Toronto, and 1,900 kilometers later, I'll be at work. But, the takeaway here is simple. The infrastructure around the Trans-Canada Highway is very, very conducive for building a large mining camp here. We have power, probably 10-cent kilowatt-hour grid power. We have water. We have rail. We have a rail spur not far from our site, if not on our property. We have access to people, contractors in Thunder Bay, which is about 130 kilometers away. So we have all the makings of building a large mining operation in an efficient way from a capital standpoint, but also in a very efficient way from an operating standpoint. The second takeaway on this slide is that we have 3 known deposits on our land package. Hanlon Lake appears to be an IOCG style deposit, copper gold. Coldstream and Iris Lake appear to also be kind of copper gold, but also polymetallic in a VMS system. But Moss Lake is more kind of a shear zone hosted style, very disseminated deposit over big areas, and that will be our focus for the first part of this drilling program. As you can see, some of the historical results at Moss Lake, we're seeing some of the same results as we get drilling into Moss Lake, 1.2, 1.3, 1.4 grams over big intercepts, 100, 150 meters. We're seeing the same of that. There's been 108,000 meters drilled at Moss Lake to date. And then there's also been about 50,000 meters drilled at Iris and Hamlin. And again, you would expect to see some fairly variable gold grades in Iris Lake up in the VMS deposit and Coldstream. Back in 2011, when this was drilled, there was no assays for copper because, as you remember, gold went to over $1,900 in September of 2011, and all they assayed was for gold. They were looking for a big gold hit. Hamlin Lake, 0.9 grams and 0.35% copper over 150 meters. Again, very meaningful intercepts that we need to test, and we need to prove, and we need to kind of try and hang each of them together on their own merits. First holes that we've run prior to Christmas, we let them run. We saw mineralization all the way down depth to the end of hole, and we're getting some really good mineralization below the existing resource and also laterally to the northwest of the resource, which is key for this project. As we make this resource bigger, we need to go laterally to the northwest, and we also need to go deeper. However, that's the 2 dimensions of the growth. There's also growth along strike, along this 20-kilometer known mineral trend, whereby we have 2.5 kilometers contained within the resource. We have near surface mineralization, some good grade over a gram, 1.1, 1.2 grams over some decent intercepts at 4 meters, from 4 meters down to about 180 meters. So near surface mineralization means near-term cash flow when this gets into production. We've built a pretty significant infrastructure to support all of this development. We've got accommodations for over 40 people. We've got a large core shack that we have 400-meter logging capacity a day. We're also doing bulk density sampling, preparing metallurgical test samples for testing. We're doing core scanning. We're doing core photography. We're doing bulk density sampling. All the things you would expect to putting a project together. This is the known resource, as I said, 2.5 kilometers long. But typical as the small juniors do, they drill these down to 250, 280 meters, and they put the results in the market and they raise some money on the back of it. They didn't take the time to understand regionally or contained within the land package what it all meant. They just focused on kind of near-term hits. So we have tremendous growth potential in every direction of this deposit. And the approach we took was simple. We were going to go very comprehensively. We started with a geophysical survey, a VTEM survey run by Geotech, and then the interpretation of that geophysical data done by Techno-Imaging, where they produce 3D models and inversion models whereby we can guide us on drilling to get the most bang for our buck for our drilling dollars. And the first magnetics were quite impressive. We now have magnetic inversion models. We have chargeability models, and we can show, and we will be showing very soon, some of these other models to our investors as we get through them. But there is substantial growth along this kind of magnetic low area where the existing resource is, all the way up to this hot pink banded iron formation to kind of the northwest, and all the way along strike here in these magnetic lows that are blue and green for the most part. And then again, there's a significant carbon graphite expression down at Hamlin and up in Coldstream. Again, we need to test. This is some of the priority drilling that we've laid out relative to those inversion models. This is on conductivity, and we'll be adding chargeability to this. so that we can really get key targets and get good results from those targets. We've got our program, and again, we got off to a difficult start because of the forest fires in Western Canada last year, and the drilling market is very competitive right now. We've resolved a lot of those issues. Certainly, the forest fires in the wintertime are gone, but now we are really starting to ramp up. The weather in Thunder Bay and at the Moss Lake project, quite cold in the wintertime, as you can imagine. So we're focusing on the marshy areas we can't drill in the spring and in the summer. And production is hampered by that, so we've adjusted accordingly. But our plan is to ramp up as the spring comes and the summer comes and the fall, so that we can get through all of our program by the end of this year. And as you can see, we do ramp up quite a bit. We'll get up to probably 5 or 6 rigs by the end of kind of March, April, and into June, July. I would expect that we're going to have at least 6 rigs turning. Again, it's about availability of rigs and it's about availability of drillers that can deliver performance, and those are the things that we're mitigating and managing through right now. But our expectation is we're going to have a big summer program. When we get through this program, the intention is to update the mineral resource estimation. Currently sitting at 4 million ounces, but it's our intention to take all of this historic data that we can use and pull into an updated status, and all of the new data, and redo our mineral resource statement. Concurrent to that, we'll start the work on an updated PEA, put in the mineral resource estimation into the inputs, and design a project around the larger size. And once we get probably 80 or 90% through the update, we can start that work probably Q1 of next year to get through and understand the economic impact of a much larger resource. Another thing we take very seriously is ESG and our environmental, social, and governance responsibilities. We have not only engaged with our Indigenous representatives from our First Nations host communities, but we have regular updates with them. We participate with them on hiring. We participate with them on hiring affiliated consultants, much like our environmental baseline study consultant, who is CSL. And they are affiliated with Lac des Mille Lacs First Nations, and very professional and excellent group of guys doing great work for us on our baseline study. When I look at the historic PEA that was updated by Wesdome in 2020, you can see that 3 million of the 4 million ounces was pulled into the project, about 240,000 ounces annualized average production, so 2.4 million out, 10-year mine life, 80 to 85% recovery. Our intent is to bring the recoveries up through extensive metallurgical testing. And you can see that, the average cash cost was under $900. But the production profile nature, given the lower input of gold resource, was quite bell curvy. And I think the 396,000 ounces in year 6 was peak production. So it is quite lumpy. And it would be our intention to try and smooth that out as best as possible through optimization exercises that we'll do when we get to that stage. But the outputs are quite compelling. This has a $572 million post-tax NPV at $1,700 gold. And companies like ours trade at 0.3 times NPV. And today we are trading at about $55 or $60 million market cap. Whereas the current economics should suggest that this should be north of 160 or 170 or $80 million market cap based on project economics. And that's one evaluation metric. It's not the only one, but it's certainly one of them. And that's at $1,700 gold. And that's with the existing 4 million ounce historical resource inputting 3 million ounces into the project. Another trading comp valuation metric is looking at our peer group and seeing kind of how we stack up against a known peer group with a like resource, low grade bulk tonnage style open pit deposits in tier 1 jurisdictions in Ontario and Quebec and the Maritimes and the US, and with sizable maiden resources at various stages of similar development. They might be a PEA, they might be a PFS, they might be areas in between. There might be a PEA, but we're trading at a what I would say is about 1/3 of the mean of our peer group. So substantial amount of share price growth for just calibrating to our peer group, let alone calibrating to our economics. And again, I think that's it. Again, that's one valuation metric. It's not the only one, but there are two for you. And there are lots of these types of projects in Canada. You've got Canadian Malartic and Magino and Hardock. There are lots of them. They're all around a gram, some over, some under, but they are in existence and they are very profitable. And if my memory serves me correct, Detour will do somewhere in the order of magnitude of 700 to 750,000 ounces in 2022 on about a $900 margin. So that's a significant amount of free cash flow, $650 to $700 million of free cash flow at today's gold price. And another valuation metric is transaction comps. There's a lot of outliers here. Certainly Detour, when they were acquired by Kirkland Lake, were given a premium for the size and scale that they brought to the table. At the time, it was 20 million ounces. It's now 30 million ounces. And again, Agnico merger with Detour back in November. The allocated kind of valuation to Detour was around $338 an ounce. So again, very meaningful. You get down towards the other lower kind of transaction comps. Cote Lake around $70, $75 for the most part with their merger with Sumitomo, and again, that is a far cry from where we are today at $13 or $14 an ounce. So again, I see a lot of opportunity for share price growth as we continue on with the development of this project. Looking real quickly at the cap structure, we'll have about half of our shares free float by June. We have a number of shares held in escrow that will be coming out on June 4th. Some will be coming out next month, but about half of our common shares will be trading. And 26% of our shares are held by Wesdome, and 25% of our shares are held by management board, advisory board, and other insiders, which provides for a very, very tight cap structure when half your shares don't trade. And we're in an environment today that liquidity is everything, and liquidity does move the share price. So that's a very, very attractive cap structure. As far as cash goes, we've got around $15 million in the bank at the end of January. We're burning about $1.5 million to $1.6 million a month right now. We'll probably crank that up to 2.2, 2.3 as we bring on additional rigs, and our production goes up in the warmer months. So we have a lot of landing room here as far as our cash position goes to our cash burn. So I think the Goldshore opportunity is very clear. We've got a tremendous team driving this project and getting the awareness out there and getting this out to the retail market, institutional market, and getting people to understand this. In this macroeconomic climate, we're setting up for a very, very strong gold run. You've got the U.S. federal government that is printing money regularly, 7.5% of currency. You've got a $30 trillion debt. They're running a budget of $3 trillion deficit a year. You've got hyperinflation happening, 6.8% in Q3 last year, 5% in Q4. You've got, Canada's inflation for January was 5%. CPI in the US is looking like it was 7% for January. So we're into a very hyperinflationary market, which historically gold has been that safety net. It has been the safety when sectors start to underperform as a result of cost of goods because of inflation. The natural safety net has always been gold, and we look forward to that happening again. But when we see all of those things compounding the global tensions today with the U.S. and Russia and Ukraine, that situation unfolding and developing even today, and you've got other, I'll say, black swan events like the pandemic and the cost implications of that to governments, we're creating an environment that is tremendously good. The macro environment for gold has never looked better in the last 30 years, in my view. And you've got a micro view here of a project that is highly levered to the gold price as the gold price moves because of the size and scale and the potential of the Moss Lake project. And then we also have optionality on two of the big copper expressions we have. So there's a lot of things going for the Goldshore opportunity. We're in Ontario. We're well funded, and we've got attractive economics. So I think we tick a lot of boxes as far as investment criteria go when we're looking at these types of projects. So, anyway, I'm glad to have presented today and look forward to some feedback from potential and existing investors.
Welcome everyone. Thanks for this opportunity to Sixth to take part in their conference today and to give you an overview of B Metals, the progress we've made with our current portfolio of projects, and how we see the company evolving in the future. Standard disclaimer. So, as important to every company, specifically to us, we've got a huge amount of background and experience as part of our sort of broader team. And certainly board of directors. So the company was founded by Clive Johnson, Tom Garrigan, Roger Richer, and myself some 3.5 years ago. You'll probably be well aware of Clive and Tom and Roger and their huge amount of experience and value creation through a number of companies, including Bema Gold and B2 Gold, which is obviously very much an ongoing growth story. Mark Connolly joined us about 2 years ago as non-executive chairman. Mark was responsible for being the managing director of Papillon Resources that bought the Fekola deposit to B2 Gold, which B2 developed into the current world-class gold mine that it is in Mali. My own experience is as a geologist by background, initially working in South Africa and Namibia, and then extensive amount of work in the Central African Copper Belt, both in Zambia and the DRC, and other project initiative elsewhere in Africa and around the world. My connection with the B2 team came around in an interesting way, whereby a very good friend and colleague of mine at the time and I led the exploration team that discovered what became the Otjikoto gold mine in Namibia, which we built to a resource base of about 2 million ounces. And ultimately, B2 Gold, again, developed that project into a very lucrative and profitable mine in Namibia. Immediately prior to my joining B Metals, I ran exploration and new business in Africa for Antofagasta PLC, the large Chilean copper producer. And during that time, our go-to external consultant on economic geology was Dr. Richard Solito, who's based in London in the UK. Someone you can truly say is a world-renowned economic geologist. And he kindly agreed to join our team as a independent technical advisor. And we've benefited hugely on our current projects and assessments we do of new project opportunities during the time he's been involved with the company. On our more advanced project opportunities that we assess and our more internally advanced projects, I spend a lot of time working closely with Dennis Sansbury as another technical advisor. And Dennis has really been responsible for designing and building B2's mines and bringing them in on schedule and on budget across the world. A huge amount of experience in mine development. This graphic really sums up an important aspect of what we see the value creation potential in B Metals. It shows Clive and the team's value creation through Bema Gold, their ongoing success story in B2 Gold, and we certainly see now as B Metals being the third company coming out of that same stable of founders, directors, and cornerstone investors. Early days still in B Metals, but we are certainly building on our original market capitalization. And as we will talk about importantly in this presentation, the relatively recent acquisition of 5 very exciting gold projects in Japan. So as a culmination of the acquisition of that private company, Kazan Resources, that has the rights to 5 exploration properties in Japan for gold, that led to B2 Gold becoming, for the first time, a significant shareholder, a strategic cornerstone investor in B Metals with approximately a 19% shareholding in the company. Obviously, that really cements the already close relationship between B2 Gold and B Metals, and very welcome to strengthen those strong technical and potentially financial ties between the two companies. This graphic really shows the spread of our projects geographically. We founded the company on the Pengeni copper project in Zambia that was still advancing and getting some very exciting results in the copper space in northwestern Zambia, one of my former Antofagasta PLC generated projects. We then added the more advanced polymetallic high-grade project of South Mountain in Idaho that we have with under an option agreement with an Idahoan-based company called Thunder Mountain Gold. And as I mentioned earlier, the more recent acquisition of the Kazan gold projects in Japan that we will now talk to in the next slides. Importantly, we do have obviously a wide geographical spread of projects, but that's really driven by the geology, prospectivity, and opportunities in the current day and age, where we're looking for those real value-creating opportunities. And we believe we have the experience and the expertise with good local teams in place at all these sites to advance these projects and create value for our investors and stakeholders. So to talk a little bit more in detail now about the Kazan Gold project in Japan, which includes 5 properties, 3 of which on Hokkaido and 2 on Kyushu, the southwestern island. Really only 3 companies seriously exploring for gold in Japan at this point in time. Ourselves as B Metals, now with the support of B2 Gold, senior gold producer, a company called Japan Gold, who have an early stage exploration alliance with Barrick, and a company called Irvin Resources, who have Newmont as a significant shareholders. And you can see the companies supporting these junior exploration companies already gives credence to the perceived pedigree of the Japan terrain and the fact that it's laid pretty unexplored in the recent decades. Through B2 and our advisors, we also have a huge depth of experience on the style of gold mineralization present in Japan, being epithermal gold deposits. And Tom Garrigan specifically has had a huge amount of success in discovering and developing with the BEMA and B2 teams deposits of that nature, specifically Kupol in eastern Russia, and the ongoing development of the Masbate mine in the Philippines with B2 Gold. So why are we and other explorers so excited about the opportunity in Japan? A lot of that comes down to the Hishikari gold mine, which has been in production for many decades down on Kyushu in southwesternmost Japan. It's been widely recognized as one of the world's highest grade gold producers of significant scale, with head grades between 30 and 40 grams a ton throughout that period. And it's produced somewhere in excess of 8 million ounces. So truly, as we would say in the business, a tier 1 type deposit. And obviously that will be the top end of the discovery potential in Japan. What's important, however, is that as you read your way and understand the geology and the exploration potential for gold in Japan, is that there actually were a plethora of somewhat smaller but similarly high-grade deposits throughout Japan, many of which ceased production at the time of World War II. Some of those projects were brought back into a certain amount of production in the 70s, but a lot of the gold mining business in Japan came to an end at the end of the 1970s and into the 1980s. And really only in more recent times now has Japan opened to exploration for gold. And obviously a lot of our interest is looking at some of those historic gold deposits and historical mines and seeing if they have the ability to be put back into production. Our strategy here, which was really guided from an early stage by people like Tom Garrigan of the B2 team, was really about selecting projects that look to be a bit more advanced in their nature, with good historical drill results, close to historical mines that were currently not in production. So we see this as quite an advanced portfolio of exploration assets in Japan. And of those projects, the sort of more advanced project is what we call the Kato project up on the island of Kaido in northeasternmost Japan. And you can see from these historical intersections why we're really excited about getting this project and getting more drilling going on this project in the near future. You know, intersections in excess of 17 meters in width at grades of between 5 and 8 grams per ton, with a sort of halo of lower grade mineralization in some of the alteration zones around the high grade core to the mineralization. There have been some challenges with the private company that was attempting to drill the Kato project ahead of our acquisition of the company, related to difficulties in getting through some of those large alteration systems with a lot of clay material, typical in these very young epithermal type gold deposits. And we've addressed that by securing a drilling agreement with a company called Energold, who have sourced a brand new drill rig, a much larger drill rig with the ability to run in deeper casing into those drill holes, which is now on site in Cato. And we hope to soon get that drilling going when we get the ability to bring our drillers into Japan. And as of today, looks like there is a bit of a pathway now to the opening up of Japan to international business travel that should be coming in the next 4 to 6 weeks. The mineralization at Cato, over and above the really compelling grades that have been intersected, we like the look of the geology that we're seeing compared to other low sulfidation epithermal deposits in the world. And we are seeing sinters at surface and near surface in the shallow parts of the drilling, which indicate that the full potentially mineralized column is developed and preserved, importantly, at Cato. And we're really excited to be getting that drilling going shortly. In terms of some of our other projects, we also have the South Mountain property down in southwestern Idaho. We really like the look of this project because it's situated on patented private land. Since we've been involved on the project, we've managed to double the mineral resource while we've maintained the drilled intersection grades of this high-grade silver, zinc, gold, and copper resource. And currently, we're looking to further expand that resource from the current 1 million tons of high-grade material towards 2 million tons by completing a program of surface drilling to further extend the mineralization, specifically the DMEA zone, as we move forward with this project. In addition to that, we're also continue to explore the Pangeni copper project in northwestern Zambia. We're exploring here under thin Kalahari sand cover, looking for concealed world-class deposits. And we were very pleased early last year to bring in JOGMEC, the Japanese state entity, as a technical and funding partner to share some of the risk on this project with us as we explore. We're getting some very compelling results from our exploration, and last year's drill program returned a number of 5-meter type true width intersections running at grades of between 0.4 and 0.5% copper. And that's sort of in line with the Sentinel mine, for example, of First Quantum, which is about 130 kilometers to the northeast of us, and the Lumwana mine, which is in operation by Barrick, also in a similar style of mineralization. Most importantly, from last year's results, for the first time, we've seen mineralized intersections in what we interpret now to be Katangan rocks down at the Q target. The importance of that is that a number of the deposits in the Central African Copper Belt, so-called sediment-hosted style of mineralization, are located within and hosted within the Katangan units with projects such as mines such as Frontier, Konkola, and Mufulira developed where we've got the right structural settings within those Katangan type units that we are now seeing on the property. So we have the right combination between amenable host rocks and fertile structures. And we certainly really understanding the geology of this project a lot more. And we seem to be focusing in on where we can really discover a world-class sized copper deposit. Very briefly now, an overview of our corporate structure. The important change here in the recent months has been the 19% investment from B2 Gold coming in as a strategic investor in the company. We've seen some interesting institutional interest in the company in that 14% segment. And obviously, insiders and advisors have a significant investment in the company out of our own pockets. We're well positioned at the moment in terms of our cash situation to deliver on the near-term catalysts of the company. So in summary, hopefully been able to show you here that the company is sort of guided and led by some of the top discoverers, mine developers and operators in the gold and mining business over a number of decades with a wealth of experience and depth in financing and developing mines across the world. We have extensive deal flow that's been cemented now with that relationship with B2 Gold. So we get exposed to projects that might be very well value accretive to investors in B metals that don't meet the thresholds of B2 Gold in terms of scale of those projects. And in the near term, we really we're looking forward now to starting our drilling activities in Japan in the next 6 to 8 weeks. And the results that come from that will be an important catalyst for the project in the near future, while we also advance our South Mountain exploration and our exploration in Zambia, looking for world-class scale copper deposits with JOGMEC. So there are our contact details. Derek Iwanaka, based in Vancouver, very open to answer any questions you may have. And thanks for this opportunity again to present B Metals as an overview. Very welcome to answer any questions and follow up as required. Please reach out to us. And thank you for your time.
Hi, I'm Mark Jarvis. I'm CEO of Giga Metals, and thank you for listening to this presentation. Here's our standard disclaimer, and this is who we are. We're a junior mining company listed on the TSXV with the objective of building. Actually, we modeled a 37-year mine life. That would have average production of 33,000 tons a year of nickel. And that includes the early years. The first 5 or 6 years, we would be producing at half of our total rate. And then in year 5 or 6, we would double our production to the full rate. Building in stages is considered less technically risky. Some years we'd be producing as much as 45,000 tons a year of nickel. So this is truly a giant project. And we are looking for strategic partners to invest at the project level to help us advance this project. It's a great jurisdiction. We're located in north central British Columbia. Very strong ESG practices, both in British Columbia and in Canada. And we've got access to both the deepwater port and we can also access the North American rail lines. These are some of the project highlights. It's an extremely large, low-grade, open-pittable deposit of nickel and cobalt and sulfides. That's what this thing is. And we can take this low-grade ore and make it into a very high-grade, very clean concentrate with an extremely simple flow sheet. And that's one of the critical strengths of this deposit. It's simplicity. Dig it up, crush it, grind it, float it. It's not a complicated flow sheet to make a nice, clean concentrate. And simple equates to low technical risk. And if you're going to spend a lot of money to build a very large mine, you want to have some certainty that it's going to work. And that's where low technical risk and simplicity are very strong. This is also a project that will have very low carbon intensity. And we're working on research that could lead to net zero carbon. So here's some of the takeaways from our recent engineering report. It's a PEA level. We are currently working to advance the project to the pre-feasibility level, which is simply more detail and more certainty than the PEA level. So you can see it's a large project, US $1.4 billion for stage 1. And then, as I mentioned, we would spend another $500 million in year 5 or 6 to double our production rate. Our net operating cost average over life of mine is $2.81 a pound to produce concentrate at the mine gate. So here's a comparison. There are 4 very large open pittable low-grade nickel deposits in Canada. We are the only pure sulfide deposit. Baptiste is a deposit of what's called a wariorite, which is a mixture of nickel and iron. It's like stainless steel in the rock. Dumont and Crawford are both a mix of both various types of sulfide, and of where-you-write. So that's one of the reasons our project is so simple. Is we've got nickel in sulfide form, and in fact, 99% of our nickel and cobalt is in one mineral. It's called pentlandite. And so to produce our concentrate, crush it, grind it, float it. And the flotation circuit has to do one thing and one thing only, and that's float pentlandite and suppress everything else. So again, simplicity itself. We don't have to deal with, separating out the where-you-write with a magnetic separation circuit. We also don't have the type of alteration products that these other sulfide projects have. So we don't have to have desliming circuits. So again, all these circuits work, but the shorter your processing sequence, the less things to go wrong. It's as simple as that. And the other comparison is that we are the only large deposit in Canada of this type that is modeled to produce Class 1 nickel. We are targeted at battery cathodes because we believe that that's where the demand is all coming from. The other projects are all modeled on selling to the stainless steel business. So they're ferronickel products. They're a mixture of nickel and iron, destined for the stainless steel market. Our theory is that the world desperately needs battery material, and the world is very well supplied with ferronickel. And then that comes right down to the assumed payabilities. We're assuming that we're going to sell in our PEA. We're assuming that we're going to sell to a smelter, and that they will pay us for 78% of our nickel content, and for 35%, by the way, of our cobalt content. And this is to pay for the smelter and refinery charges. So this is based on a real market, a real world market. So the other projects are ferronickel projects, and they assume that they will be selling to roasters or ferronickel plants of various kinds, and that these recipients will pay in excess of 90%, for in excess of 90% of the nickel content. So that's another difference. This is something nobody's done before, whereas we're modeling to something that is a market that exists today. So nickel prices historically are quite volatile, as you can see. This is a 40-year chart of nickel, and the brown line is the nominal prices, but the black line is nickel prices corrected to 2021 dollars. So taking account of inflation, and you can see that every once in a while nickel prices go crazy as the market gets tight. You can also see that the average price of nickel over this period is $11 a pound. And nickel prices just recently went through $11 a pound for the first time since 2011. And so this chart's just slightly out of date. It's a couple of weeks out of date. Things have been happening very quickly. And the reason is that Class 1 nickel, at least, is getting tight. You can see on the chart on the left is LME nickel stocks. They're down well under 100,000 tons of Class 1 nickel, and that corresponds with the rise in price of nickel during the last year that you can see on the right-hand chart. This is all driven by the rise of electric vehicles. And this is an amazing phenomenon that's happening, a technological shift that is changing supply chains around the world. It is estimated that by 2040, you're going to need an additional 1.5 to 2.5 million tons per year of nickel just for batteries. And this is the equivalent of 40 to 70 new large mines. In other words, mines the same size as Turnagain. It's just remarkable. And in fact, batteries are now 13% of the demand for nickel. Stainless steel has always been the largest use of nickel. Interesting, in 2017, batteries were 3% of nickel demand. It's just remarkable how quickly that end use is growing. And again, here's the reason. EV sales. I've been watching what the prognosticators say over the last few years, and even the most bullish ones have been wrong. They've been guessing too low. I mean, EV sales doubled in 2021. This is and it's just continuing to gather pace. This is a once in 100-year phenomenon, and all these vehicles need batteries, and the batteries need nickel. If you want range in your electric vehicle, you need more nickel in your cathode materials. Nickel is the part of the battery, it's the part of the cathode that has excellent energy density. It can hold a lot of electrons. And there's really no substitute for it if you want range. There is another type of lithium-ion battery, LFP, lithium iron phosphate batteries. They don't have any nickel. They have much less energy density, and they're suitable, and they're being used for sort of low-end commuter cars. But you will never take one of these on a road trip, put it that way. You need nickel for the high end. And the market going forward, we believe, will be a mixture. Part of the market will be LFP, but the high end of the market will certainly be NCM or NCA, nickel-based chemistries. So these are the announced battery projects, gigafactory projects in North America. And if you build all these, you need, just for North American gigafactories that have been announced, 150 to 250,000 tons a year of incremental nickel supply just to feed those battery plants. And these are current operations in North America. And these are the projects that are waiting to get built. And as you can see, if all of the projects were built, that's still not enough to supply all of the gigafactories. I believe that all these projects are going to get built this market cycle. And you can see again, the green projects are projects that are modeled in their engineering studies to produce Class 1 nickel. The projects in blue have been modeled to produce ferronickel for the stainless business. And this is the concentrate we can produce with very low deleterious elements. It's a premium product. And so again, we modeled just selling this to smelters, and then they could process it to Class 1 nickel. However, we're looking at producing mixed hydroxide precipitates. In other words, we would take our concentrate and we could process that ourselves into a chemical form of nickel, which is in extremely high demand right now by battery manufacturers. And the reason we're looking at that, and we're looking at modeling it as part of our pre-feasibility study, is that the payables for MHP are so high. Currently, the payables for nickel and cobalt are more than 90% of the contained product. And, we think that as more MHP comes to market, as it will, those payables will probably subside somewhat to maybe the 85 to 90% range. However, we think that by producing MHP, which will incur more capital costs and will incur more operating costs, that the higher payables that we would get for MHP as opposed to concentrate would more than make up for that. And the kicker in this is that we can then, instead of going for an 18% concentrate, we could go for around a 14% concentrate is what we're thinking. And by by going for a lower grade concentrate, we can increase our recoveries. And recoveries in this business tend to trump everything else. But a 14% concentrate could be easily handled by a pressure oxidation circuit added to the circuits that we're currently modeling to produce this product for the battery market. Also the pressure oxidation circuit has the flexibility. You can, once you've got nickel and cobalt in solution, you can do just about anything with it. So you could also produce nickel and cobalt sulfates with this circuit. So this is something that we are studying and will be testing and will be incorporating into our next level of engineering. Again, sulfides are inherently low carbon intensity relative to laterite deposits. I should say that there's two main types of nickel deposit: the sulfides and the laterite deposits. Laterite deposits are largely mined in the tropics, in places like Indonesia, Papua New Guinea, and they are inherently, higher carbon intensity. And then that's exacerbated by the fact that most of these projects are powered by coal. So, if you think you're, saving the world by buying an electric vehicle, if your nickel is sourced with the HPEL, with HPEL sources of nickel in these jurisdictions, well, your carbon footprint's very high. But also, I should say that in many cases, the environmental damage is quite significant. These are strip mines. They, involve, mowing down tropical rainforests to get at the clays and soils that contain the nickel. They get processed very aggressively using sulfuric acid. And in many cases, the tailings are dumped into the ocean. So we are at the very low end of carbon intensity, and we can see a path to carbon neutrality. So here's our plans, and this is the timeline. We hope to have a PFS engineering study done by the end of the year. We've got a good, strong board that understands the nickel market extremely well, and we've got board members with excellent access to capital markets. Here's our capital structure. And if you have any questions, we're always happy to talk. Thank you very much.
Hello, everyone. Thanks for joining today, and definitely pleased to present here at the 6IX Spring Conference. My name is Scott Eldridge, and I'm CEO and Director of Canagold Resources. Canagold is a gold exploration and development company focused on our flagship asset called New Polaris, which is located here in our home province of British Columbia. And we'll spend most of our time today talking about New Polaris. So I will draw everyone's attention to our standard cautionary note, as I may be making some forward-looking statements during today's presentation. So let's start off with investor highlights. August 2020, we had a series of corporate level events that collectively we call the rebirth of the company, where we had a 5-for-1 share consolidation. We changed the name of the company from Canark to Canagold to further reflect our corporate level strategy that we're now 100% focused on our flagship asset in BC. And that also helped us with a financing where we raised $8.4 million that was significantly oversubscribed. And primary usage of proceeds for that money was to drill at New Polaris. And that's exactly what we've been doing sort of for the last 10 months since May 2020 is drilling there. And New Polaris itself is a fairly advanced project. As I mentioned, it's under that classification of a development story, where we have a very robust PEA done at $1,500 gold. At $1,900 gold, the current spot price, these numbers only look better. And the drilling that we've been doing has been really focused on infill drilling our inferred to move it up to measured and indicated, as we do plan to commence a feasibility study in the second half of this year. So a snapshot of our public company information here. We have 3 listings: Big Board TSX in Canada, OTCQB in the US, as well as Frankfurt over in Germany. We have about 87 million shares outstanding. There's about 11.5 million warrants associated with that financing back in August 2020. Those have a strike price of 65 cents, and they do expire in November of this year. We're currently trading at around 40 cents, so that would put our market cap at about 35 million Canadian. And we do have a fairly healthy treasury right now with about $4 million in the bank. And we are funded for the current drilling that we're just finishing up right now. In terms of our top shareholders, the Sun Valley Gold Fund out of Dubai owns about 9.9%, followed by Eric Sprott, the Ruffer Gold Fund out of London, England. Our founder and chairman, Brad Cook, is a significant shareholder, as well as a few high net worth individuals out of the US and Europe. So a bit of background on the management team. Myself, I've been in the metals and mining industry now for about 13 years. I started off as an equity buy-side analyst. I've ran my own merchant banking firm, and I've been on the issuer side of the business for about the last 6 years. Collectively, over my career, I've raised about $500 million for the industry, everything from grassroots exploration up to construction financing for builds. And I've been the CEO of this company now for the last 3 years. And the reason I joined the company is the founder and chairman, Brad Cook, who has an upstanding relationship going back to the past when I used to raise money for Endeavour Silver out of Germany. Brad's our founder, and he's accredited with the discovery of the 1 million ounces at New Polaris. So I'm of a financial background, but I am surrounded by a very strong technical team led by our president, Gary Biles. He's a mine builder, mine operator. He's done it 4 times, 3 of which were high-grade underground gold mines, including the fabulously high-grade Eskay Creek mine right here in BC, where he was mine manager for Homestake, as well as being part of the build prior to them being taken over. Knox Henderson recently joined us as our VP Corp Dev. That's a name that many people recognize. He was previously with Kodiak Copper as well as Great Bear Resources. Great Bear was, of course, recently taken over by Kinross. So hats off to the team there. Troy Gill is our VP Exploration. Troy is Australian. Spent many years with Rio Tinto, where he twice won their internal award for Discovery of the Year. And prior to that, he worked at Peak Gold Mines, an operating underground mine in Australia. And then Philip Yee, chartered accountant, he's our CFO. So briefly on the board, Deepak Malhotra is our lead technical director, PhD metallurgist. Martin Burian is our lead on corporate governance, chartered accountant, chartered business valuationist. Andrew Bowring is our leader on capital markets. Many people know Andy's name out of Canada here as a mining entrepreneur, very successful at taking private companies public. And then, of course, Brad and myself on the board. So moving on along to the project side of things. So we do have a portfolio of exploration assets in BC and Nevada. And we do focus 100% of our time and attention on New Polaris. So any of our other more grassroots exploration projects, we do option them out to create value for our shareholders. And collectively, that portfolio actually does cover our annual corporate G&A. So that means any money that we raise goes directly into the ground at New Polaris. So a brief history on New Polaris. This is a brownfield site, so it does enjoy many benefits of being a past producer. The production here took place between 38 and 51, where they were mining underground at 10 grams per ton, and the old timers recovered about 250,000 ounces of gold in the form of a concentrate during that historical production. So fast forward to today, what do we have here? It's an NI 43-101, 1 million ounces, split about 50-50 between indicated and inferred. Our diluted grade that has a 20% mining dilution rate factored in is just over 10 grams per ton. So this is a very high grade project, and it is reflected in the PEA. Again, that was run at $1,500 gold, and we see very robust results here. Particularly the after-tax IRR hits 56% with an NPV of over $300 million US, all with a very quick after-tax payback of less than 2 years. So what differs from the past versus how we are moving the project forward is rather than producing a gold concentrate, we have a metallurgical flow sheet that would allow us to produce doré bars at site, fly them out, and get paid on the same day. And that's exactly how we'll move forward with the project, going through a feasibility study later this year. Stepping back to the location of the project. So again, it's in our home province here, BC, the northwestern corner of the province. And typically we go in and out through Atlin. So whether it's a small fixed wing aircraft or a helicopter, you can get to the project in about 1 hour from Atlin. This is a very mining friendly part of the world on both sides of the border in Alaska and BC. And we are surrounded by operating mines operated by larger companies. And as of today, we have a fully staffed 20-person exploration camp where we're just sort of winding down a current drill program where since May of last year, we've drilled almost 30,000 meters. And we'll go through some of those results today. We own this property 100% in terms of the mineral rights and the surface rights. And at a very high level on geology, this is a mesothermal gold vein system. You don't typically see these types of deposits in BC. They're more known in the Red Lake camp of Ontario. However, I will point out one of our neighbors on the Alaskan side, the Kensington mine run by Core Mining, it's also a mesothermal system. Moving over to our resource table. So as I mentioned earlier, we have about 1 million ounces at 10 grams. It is split about 50-50 between indicated and inferred. And again, the grades you can see here, 10.8 gram indicated, 10.2 gram inferred. These already have a 20% mining dilution rate factored in. And the bulk of the 30,000 meters that we've drilled over the last 10 months has been focused on infill drilling the inferred, just to tighten up the drill spacing there, galvanize the inferred and move it up category. However, we've also got some really encouraging results on additional parallel or on echelon veins in addition to the down plunge extension of the C-West main zone. So we're now seeing resource expansion opportunities throughout this drill program. This is a snapshot of Troy Gill taken up in the summer. He's our VP Exploration. Generally, he's fairly conservative and not overly excitable, but he is smiling here with a very nice sample of 50 grams over almost a meter. And this result is very indicative of the drilling where we've hit high-grade mineralization on every drill hole so far. And we've only actually released about half of the assay results of the 30,000 meters that we've drilled. So continue to watch our news and you'll definitely see assay results coming out approximately every 2 weeks. So that takes us to some of our more recent results where we'll just start with an overhead view, a drill plan of the project. And you can't necessarily see the scale on here, but because this is a very condensed 1 million ounces at 10 grams, our mill would only be 750 tons per day. So our environmental and land footprint here is very, very small. And you can see the strip there, that's the airstrip. And then we've outlined here the various drill holes in terms of previous drill holes and the most recent drill holes. And we'll talk about some of the most recent drill holes here. So the current resource is in the yellow area and it only goes to a maximum depth of 600 meters. And until recently, the project had never been drilled to a depth beyond that. However, we recently released a couple of assay results that are going down into the 1,000 meter area that hit mineralization that in theory would meet our economic cutoff or be above that. So we can truly say now that we've extended this deposit another 400 meters. And we were always optimistic that would be the case here. But now we've proven it with significant drill intercepts that show that this ore body does indeed continue at depth. And we're very optimistic that it can be much larger than 1 million ounces. Next, we'll move along to some other previous results along parallel veins. So if you can see in yellow here, this is the C-West main vein, host to the 1 million ounces. And sitting just above that in the hanging wall, we have the C9 and the C10 veins, where yes, we knew these veins were there, but no, they did not have any existing resources on them. However, in this recent drilling, we've seen 17 grams over 8 meters, 11 grams over 17 meters, very significant grade in addition to significant mining widths. Our average mining width on the deposit is only 3 meters. So these would most certainly fall within a resource category and hopefully eventually in a mine plan. And again, this is just adding ounces in terms of parallel veins in addition to the down plunge extension of the main vein. This is a 2D image of what the resource looks like. All the drilling is done from surface, and you can see the density of drilling only going down to about 600 meters. And as I mentioned on the previous slides, we've now extended that more into the 1,000-meter boundary. There would definitely be more drilling to do between 600 meters and 1,000 meters to prove up a resource. But the proof of concept is certainly there that the mineralization does continue at depth. So why are we so optimistic that we can make this bigger than 1 million ounces? Well, we look to other analogous deposits in the Red Lake camp of Ontario, and what immediately jumps out here is the vertical depths that these deposits can go to. Here we sit in the middle at New Polaris, only 600 meters resource, where these commonly go for 1,000 to 2,000 meters below surface. With a high-grade project, we certainly like to boast and brag about that. We all know the proverb, grade is king, and that absolutely resonates true on New Polaris. If this were a mine again, it would be the 6th highest grade gold mine in Canada, the 11th highest grade gold mine in the world. And it's great to have high grade, but what about the flip side of the coin? We also need to look at the costing side. So our all-in sustaining cost in the PA, which we'll talk about, is only $530 an ounce, which is actually about half the industry average, which is about 1,000 right now. So more details on the PA, we would only require a 750 ton per day mill, and that would produce 80,000 ounces of gold per year. However, with the recent drilling where we're seeing opportunities for resource expansion, we think this would have a direct knock-on effect to a better production profile, where our goal in a feasibility study would be 100,000 ounces per year versus the current 80,000, and that would make the mill size slightly larger, probably going to 950 tons per day. It's got a fairly modest capex of only 110 million from the PA. And one of the things I like to look at is what's the NPV to capex ratio. Ours is 3-to-1 at $1,500 gold, which is a very robust metric for any gold project. Lastly, we'll move along to peer comparison. So whether you like to use PNAV or enterprise value per resource ounce in the ground, you'll probably come to the same conclusion that we are undervalued compared to our peers. Our EV per resource ounce in the ground is currently about $20 right now. So we certainly feel there's some ground to catch up on our peers. And the way that we're going to do that is to deliver at the asset level. And that's exactly what we've been doing with this current drill program. So keep your eyes and ears open, because as I mentioned before, we've only released about half the results. So in conclusion, we certainly feel that there's strong valuation upside in our current share price. Even though we have our hands full at New Polaris, we always have our eyes and ears open for other opportunities. However, we are very happy to move New Polaris forward and advance it through that development phase, where we would start a feasibility study later this year. And we are led by a very strong management team and board with many accolades and accomplishments behind their name in the mining industry. And lastly, we do have a very healthy cash position of $4 million. So we're currently funded for our current plans. So thank you very much, everyone, for listening. And if you do want to chat a bit further or get any other information from us, please give us a call or email Knox Henderson, our VP Corp Dev, or check out our website. Thank you very much for listening today.
Hello, my name's Tim Livesey from Oriole Resources, and I just want to give you a brief introduction to the company and our main projects in Cameroon and Senegal. We're an AIM-listed junior, and we have active exploration on the ground in Cameroon, and we have a significant license holding in Senegal, which is currently under the process of an earn-in by IAMGOLD, a Canadian mining group. In Cameroon, we have the Bibemi and Wapuzi gold projects in the north of the country. And granted only last year, we have the Central Licenses Package, which is a group of 8 contiguous licenses which host, we believe, the potential for a gold district, a new gold district in Cameroon. Starting off with the Bibemi project in the north of Cameroon, this is the most advanced of the 10 licenses we have. We did a maiden drill program at Bibemi starting in February, March last year. And so far, we've done 3 phases of diamond drilling on the project. It's an orogenic gold system. We have outcropping gold vein and shear systems on surface, which we've traced for around about 12 kilometers in total. And we've focused our initial phase of drilling on testing the hotter zones along those systems. And then we zoomed in with phase 2 and 3 drilling into what we call Bekasi Zone 1, which is one of 4 prospect areas where we saw good results from the initial prospect drilling. What we're targeting here is an envelope of gold mineralization associated with the shear zone, here in the more felsic units. And we've intersected predominantly subvertical vein systems associated with an overthrust complex, but also some subhorizontal vein systems. We do get quite nuggety gold in this area. And as we're doing diamond drilling for these initial phases to maximize the structural data from each drill hole, some of that nuggety gold effect is being masked in the small volumes of core that we're actually intersecting. In the center of the country, we have 8 new licenses, and these were originally identified during the prospectivity analysis project that we carried out in 2019. We made the submissions in September 2019 after looking at the whole of Cameroon and identifying 7 target areas which ticked the box for us, being the right geology, the right age, the right alteration, the right structures, deep tapping, long-lived structures, and evidence of gold-bearing fluids. And of those 7 areas, we were lucky enough to, when we ranked them, we were lucky enough to be able to see that our rank 1 and 2, our first 2 highest ranked areas, were actually open ground. These were in the center of the country. We made the applications in September 2019, and those licenses were finally granted in February last year. Now, what's really important about this area is it's an area impacted by what we call the Cholero-Banyo shear zone. This is a splay from the central Cameroon shear zone, and it's a very structurally complex area. But essentially, we have a corridor of shearing with going to the northeast southwest, and we have a suite of cross-cutting structures northwest southeast. Now, the Cholero-Banyo shear zone effectively runs through the southern end of the licenses here, this corridor here through these eastern 5 easternmost licenses. So what we have in the west in these 3 licenses is slightly different geology and slightly different topography. Here we're looking at more recent Cenozoic volcanic system overlying the basement granites and gneisses, and there's a possibility there for some epithermal mineralization, as well as the underlying shear-hosted orogenic systems. So great potential in this area. And if we fast forward to the work that's come out of the PRECASM program in December last year, PRECASM is a World Bank funded prospectivity program, which was carried out under the auspices of the ministry in Cameroon with the assistance of BRGM, the French Geological Survey, who are really experts in mapping and prospectivity work in West Africa and have been for decades, and the GTK, the Finnish Geological Survey. GTK have been working with Cameroon on developing the licensing and the mining law, and the BRGM carrying out countrywide prospectivity analysis, airborne geophysics, regional geochemistry, petrography, and mapping of the areas. Now, this map in on the right-hand side shows 3 red boxes, which are 3 of the grid boxes with which BRGM divided the country for mapping purposes. And you can also see a yellow outline. The yellow outline around here is a shape file which BRGM, which Precasm have created and made public in December last year. And that is an indication of what they consider to be high prospectivity for gold. In fact, this is the largest gold prospective area which BRGM identified in the entire country. And then if you look in the center of this yellow area, you see these little square boxes. This is our central license package. And here we have 8 licenses, contiguous licenses, granted in February last year. So we were very pleased that the BRGM, the Precasm work, supported the work that we had done and supported the targeting that we had done. And we followed up immediately on grant of those licenses with some stream sediment sampling, and we're currently in a soil sampling program. Now, our other assets in Senegal, I mentioned we have a license under earn-in from IAMGOLD. Here we have 472 square kilometers, and we have a number of prospects on that with gold anomalism. 2 key ones which IAMGOLD have been looking at. In the south, the Medina Barfe prospect, which is close to IAMGOLD's own Boto mine development project. And in the north, the Fare prospect. Now, the Fare prospect had previously been the most advanced drill target prior to IAMGOLD coming on board. IAMGOLD have just completed their 4th year earn-in on this agreement. That's a $4 million spend over 4 years, and they've taken the option to have the ability to go from a 51%, which they've just reached, to go up to a 70% by spending another $4 million over 2 years. So we're free carried on this project, and the critical thing here is that the results that have been coming out of the Fare target are really quite spectacular. This table is a combination of some of the early drilling carried out by ourselves prior to the joint venture and some of the confirmatory drilling carried out by IAMGOLD. At Fare, we have 3 anomalous areas, total strike extent of just over 6 kilometers, and the 3 target areas, Fare North, Fare South, and Fare Far South, all show evidence of nice, wide, high-grade gold intersections. Importantly, the recent drilling by IAMGOLD has been the first drilling at the Fare Far South project, and you see we've had some really significant intersections here, most notably 35 meters at 3.61. Now, when you look at the better intersections from Fare South, such as 59 meters at 2.2, 42 meters at 1.36, 23 meters at 1.84, you'll see that the Fare prospect area really has got the potential to host a standalone gold deposit. So that's it in a nutshell. Cameroon is our primary target, early stage exploration, a brand new gold district. Senegal, a little bit more advanced with an earning partner, IAMGOLD, spending the money on that license, and we're free carried up to the end of their 70% earning. We as a team are a very technically focused team with a lot of experience in Africa in particular, in gold and base metals. We have a real focus on operating as the creating a position of being the preferred operators in the countries and the projects we work on. And we look to develop our portfolio rapidly so that our spend is maximized and boots in the ground exploration as opposed to overheads and G&A. We like to say we like to fail fast, rather move away from a project than keep hanging on to something that's not going to carry you through. And we truly believe that with our portfolio of licenses in Cameroon and our license in Senegal, we have a package which really can deliver in the future. Thank you.
Hi, my name is Eric Zoncherb. I'm the Chair and CEO of GR Silver, ticker GRSL on the Venture Exchange. And thanks for taking the time to listen. I'm going to move ahead here in the slides. You all know what those disclaimers are, so we'll just focus on here. So the first thing, as an analyst, I spent 34 years as an analyst on the street. The thing that I looked at when I was looking at junior mining companies are what I call the 4 Ps. And so from that perspective, I'm looking at project, place, people, and price. From a project perspective, we're focused on the marquee Plomosas project. Has a past production history from the Spanish era to modern, district scale, extensive low to intermediate sulfidation epithermal mineralization, a bounty of historical data allowing sort of the peeling of the onion, if you will, on controls on mineralization, active drill programs testing a modern exploration model focused on high-grade silver and gold, new discoveries driving continued resource growth, and we've proven that in the recent San Marcial depth extension. Second, place, Sinaloa. We've got a wholly owned district scale, 700 square kilometers of land, existing infrastructure, including road access, power, existing agreements with local ejidos, the farmer cooperatives. It's essential to have that in Mexico in place for production in 2 areas and exploration in another. We have a strong social license that we've earned, not just through employment, but also education and training, health. We have 2 nurses and an ambulance on site, for example, and we've been able to work through COVID, through strict protocols, arriving at camp and in testing while on site. People. As of this week, I've been able to join as CEO and join working very closely with the founder, former CEO, and now President and Chief Operating Officer, Marcio Fonseca. Marcio's done a fantastic job in having the vision to build this land package, executing on that business plan, and now compiling all the historical data that's available into a modern exploration model that's been proven already to work. We have a great team on the management side and a wonderful, diverse, and experienced board. Finally, price, valuation. If you're looking at where we're trading at 80 cents US per ounce in the ground. And that's compared to about $1.50 for peer companies. So there's a significant discount there that we need to address. So returning to the presentation here, moving on to slide number 2, you can see here the exploration package on the left in brown. It's an extensive land package, as I mentioned, over 700 square kilometers. Outlined in red is the core, the Plomosas project where we're focusing. On the right, you can see the geology, a general overview on geology. What's really important here in this style of mineralization is to see those strong structures, those dashed lines, the faults that run through more or less on a northwest orientation. And then also cross structures, and where those cross structures occur, these are all fluid conduits that allow the fluids that carry metals through and then deposit through. Next is a shot from west to east, an overview of the core project, the core Plomosas project, 476 square kilometers. And what you see in the red lines there are the structural corridors, those 3 main structural corridors combined over 45 kilometers strike length. And within each structural corridor, you see multiple epithermal veins passing through that in a more or less parallel sense. And it's, again, these important conduits for fluids, avenues for mineralization. So what are we going to do through 22? Well, what we're going to do is continue to grow the resource base, building ounces at the Plomosas project. There's a 2-pronged approach for that. One is through expansion drilling. As I said, we have an exploration model now focused on high-grade silver and gold that is working, as demonstrated at San Marcial, which we'll talk about in a second. And the second prong is through infill drilling. To us, that's the low-hanging fruit, particularly at the Plomosas mine area, where we provided a resource, an initial resource, the first time ever on the project, despite it being an operating mine, in infill drilling there. And we think that's low-hanging fruit to upgrade the grade there. So turning to San Marcial, just as a reminder, I'm going to show you again on the map where that is. San Marcial here, located in the southeast of the project. So at San Marcial, we've just completed an 8-hole underground drill program. Marcio Fonseca had a brilliant idea to look at the tunnel that was existing, slash it out, make it of a modern size, and make sure it's in stable ground conditions. 300-meter tunnel into the deposit beneath it, and that provides a drill station that you can drill underground to check for the depth extension there. And sure enough, we've published 4 holes, 2 of which are the best holes yet on the property. And those 2 holes indicate high-grade mineralization. We're going to focus on that in a second. So we're building on 39 million ounces, 29 indicated, and 10 million ounces inferred that San Marcial already has from a 2019 statement, NI 43 statement. And we've also done some preliminary metallurgy that suggests 90 to 93% recovery using leach. Moving on to the next slide. This is now a long section through the San Marcial deposit, and you can see here a hatched area. That hatched area at the top is the Whittle pit, pit constrained resource that is part of that 2019 statement. Above the dashed blue line are the 52 historical holes that go into that resource. And then beneath that are the 8 holes drilled, as well as a few planned ones in yellow. But the 8 holes that have been drilled, again, 4 reported and 4 that we're waiting for late April, early April, something like that. But we are seeing excellent intersections. Well, key to recognize here is that as we go deeper in this deposit, we're seeing 799 grams over 18 meters, 299 grams over 38 meters. These are excellent intersections. But what we're seeing is as we come down to depth, that we're seeing higher grade silver. And we're also seeing a shift with more dominant silver and some gold, and the base metals are trailing off. So if I move on to the next slide, at the bottom here at the San Marcial resource statement from 2019, you can see a grade there of approximately 110 grams of silver and 120 grams roughly of silver equivalent. And what we see there is that as we come down, that the grade actually is increasing. As we said, we've got 18 meters of 773 grams of silver and 299 grams for silver over 38 meters in the other hole. So grade is increasing. The proportion of base metals is decreasing. So increasing silver as we go down to depth. Very, very important. As we move on to the next slide, we're now talking about the Plumosis area, the Plumosis mine area. And again, I'm going to go back to the map and show you where that is located. So San Marcial is here. This larger icon, that is the Plumosis mine area. So we're approximately 5 kilometers away. The Plumosis mine was in operation several years ago, and it was largely a base metal mine operated by Grupo Mexico. And in that case, we saw from Grupo Mexico, here's a shot through, a long section through that mine. All these colored blotches are the stopes from past production. And then you can see the gray traces of the underground development in that. So that's 8 kilometers of underground development that provides access. All of these stopes combined give us historical production of approximately 2.5 million tons at an average grade of 190 grams per ton silver and a shade under a gram of gold. So when we go back to this slide and look at that resource that we published in August of last year, you're looking at approximately 45 grams per ton silver and under a gram gold. So what happened here? Why is it that this production grade of 190 grams per ton compares to 45 grams per ton in our resource? It's not too surprising that releasing this in August of last year was a disappointment and our stock sold off on it. So we're in the doghouse, and understandably so, with that kind of a disappointment. But let me tell you, there are 3 very important reasons why we believe that there's an opportunity to increase the grade here. So coming back to this slide where you can see these stopes, when we delivered that resource estimate in August, there were several things that were going on. So this is based on 586 drill holes, historical drill holes. Approximately 82% of those holes were validated. In other words, we had the core and we had the documentation for those holes. The other holes that were drilled into the deposit were not included. In fact, they were included at 0 grade in the resource model. That's a conservative way to do things, and that's good. Secondly, this was a base metals mine operated by, as I said, Grupo Mexico. And so they were focused on the lead and zinc. And they were focused on the sulfides that provide that lead and zinc. So when they had a drill intersection through the main hydrothermal breccia, the Plumosis breccia, they saw sulfides at the upper contact, the footwall, the hanging wall contact, and in the lower contact, the footwall contact. They sampled where they saw those sulfides, but not in between. So a lot of selective sampling. That interval went into the model at 0 grade. Okay, and so we know from 5,000 samples underground that there is precious metals mineralization in that area. We know that from some of the twin holes, that there is precious metal mineralization in that interval. But that does not go into the resource model at those grades. It goes in at 0. One third point is I want to show you here, and that is this shot. Okay, now, so this is a slice east-west through the Plumosis mine. And this blue body that you see here is that breccia, that Plumosis breccia, the main polymetallic body of the mine that Grupo Mexico were focused on. These orange panels that you see, one at the north end and one at the south end, these panels are from our work, 3-dimensional modeling, the first time ever on the project, that shows that there are these cross-cutting structures that localize mineralization, and specifically the second and third pulse of fluids that bring higher grade precious metals into it. And you see to the left and to the right some of the high grade gold intersections in here. And these are intersections over tens of centimeters, over a meter. So they're very, very high grade over narrow intersections that you see in there. These are too far apart. This was random noise to the previous operators. And so consequently, we want to do this very important thing. And that is, we are in the progress, and you can see top left, underground rigs that we own. Bottom left is a surface rig that we own. These are drilling today to do a very, very targeted surgical infill drill program with short holes to test these blank areas where other data came into the resource model at 0. And so what you're going to see over the next few months is news releases that say, in this block, the block model says 45 grams per ton, but our new drilling shows that we're intersecting X. Now, if we go back to the resource model, here you can see the output from that 45 grams. I'm not telling you that we're going to see a multiple of this. All I'm saying is that if we can demonstrate through that surgical program, infill drilling, a higher grade, that will move the resource to a higher grade towards that 190 grams per ton historically producing there. Not a promise, but in that direction. So what I do commit to doing is seeing a resource update at San Marcial within 1 year, capturing some of this volume, and also within 1 year, infill drilling on here that takes the resource grade north from 45 grams per ton overall. Okay, that is the focus of GR Silver at this point in time. Now, on a tertiary basis, we have an enormous amount of smoke on the property, if you will. So this postage stamp concession here, La Colorada, towards the bottom right, that is a privately owned mining concession that is currently producing from underground high-grade gold. And what we've done is we've been looking at the extensions to the north and the northwest towards Lomo Dorado. And we are getting some very, very nice results that we've released a few weeks ago in trenching. That channel sampling is generating things like an intersection of 2.3 meters at 16.5 grams gold and 244, if I remember correctly, grams per ton silver. There are some drill holes now underneath that. And again, in April or so, there'll be a release that will talk about that. We'll see if we can demonstrate that these veins extend not only at surface, but also at depth. So if we go to the next slide, we can see more work. This is now a view to the northeast. You can see at the bottom La Colorado, and the entrance to that private mine off to more towards the left and upward is Loma Dorado, where we're seeing some of these trench results. And off on the parallel side, on the San Juan side, you can see a lot of really nice intersections at surface. So I come back to the idea again. The focus is on San Marcial. Number 2, Plomosas on the grade. Thirdly, will be some of the efforts that we put in at surface in other locations. Now, again, the focus has been on that structural corridor up to the northeast. Not much work has been done in the middle on that structural corridor. Some work has been done on that lower left structural corridor that has the La Trinidad mine open pit in it. That was 300,000 ounces open pit heap leach. That's work to come in the future. Moving on. The capital structure, 167 million shares outstanding basic, 190 million shares fully diluted. A lot of those instruments, warrants, and options are out of the money, so not too much to worry about. We are beginning to get increasing analyst coverage, institutional attention. Currently, we're at around 29% institutional investors, 7.5% owned by management and insiders, so definitely skin in the game. First Majestic owns 12.9%. That was a block that came when we purchased the Plomosas mine property. And then about 50%, which is retail and high net worth. Great experience management. I've sung the praises of Marcio. I was a mining analyst for 34 years, originally a geologist. Trevor's doing a great job on exploration and corporate development. Blaine is a very experienced CFO, and Brenda is a great partner on the VP corporate communication side. We have a wonderful, diverse board. A couple of people I'll highlight there. Laura Diaz, a key member. She is an outstanding lawyer, Mexico City-based, and former director of mines for Mexico. Knows the system intimately. Another key player is Jonathan Rubenstein. Some of you may know as the former chairman of Mag Silver, a very powerful exploration and now development and producing silver story. Moving on. ESG is a very hot topic, and I think some people might be extending, if you will, on the ESG side, or greenwashing. From my perspective as CEO, I want to formalize what we are doing and very much celebrate what we're doing on the ground with the local communities. As I mentioned, we have a very strong social license with local communities. Doing wonderful programs in education, training, and health. And so we look forward to recognizing and celebrating that. So I believe we do have the 4 Ps, a strong project in a wonderful place. We have the people that are doing the right thing, a fantastic team of young, talented Mexican people that we're working with, and also price at 80 cents versus $1.50 mean in the EV per ounce. That's a fantastic opportunity. And there I shall leave it if there's any questions. Thank you very much.
All right, thanks for having me, everybody. My name is Chad Peters. I'm president and CEO of Ridgeline Minerals, and today I'm going to give you a quick 15-minute breakdown on why I think we're a really exciting investment in the Western U.S. So a quick disclaimer, I am a geologist, so I'll try to keep the forward-looking statements to a minimum. So why invest in Ridgeline Minerals? We are a discovery-focused, Western U.S.-based gold and silver explorer with a portfolio of now 5 highly prospective projects in Nevada and Idaho. We're also partnered with Nevada Gold Mines at our SWIFT project. I think there's a lot to offer with our company. We have over 163 square kilometers now, as you can see right here. One of the things that really underpins the whole company is our strategic drilling contract. I actually co-founded the company with the owner of a drilling company. What this means is we got a discounted drilling contract for 15,000 meters worth of drilling, which has really let us springboard the company into our IPO in 2020. So that led to a new discovery at our Selena project in 2020, which has continued to grow, and we're actually drilling this spring. It also led us to a $20 million earn-in agreement with Nevada Gold Mines at our Swift project. Now that agreement in itself, that $20 million is worth more than our entire market cap right now. So I think that's a pretty exciting part to our company. We also have core land positions at our Bell Creek and Carlin East projects, which Nevada Gold Mines just announced a 1.2 million ounce resource grading 7 grams per ton at Wren, and a 0.7 million ounce resource grading 11.5 grams per ton at North Leeville. Now, both of these projects, are directly adjacent to our land positions at Bell Creek and Carlin East. So very exciting opportunity for us to potentially make new discoveries on trend of these existing resources. Now, on top of all of that, we have a very shareholder-friendly structure. Our management team owns 15% of the company. I'll show you how we've been able to keep that tight. We have 56 million shares non-diluted, 70 million shares fully diluted. And I myself own 6.8% of the company. Been able to do that by bootstrapping the company early on out of my garage, and then putting $150,000 of my own cash into the subsequent financings leading up through the IPO. So very heavily aligned with our shareholders. We're sitting on a strong cash position of $2 million Canadian and a very low cash burn. We have a very small team, very focused, and a very strong shareholder base with some of our top shareholders, including EMX Royalty Corp, myself, Vior Inc., which is a Canadian explorer that took a position in us very early as a private company, and Paul Stevens Investment Management, and our co-founder, Steve Nielsen, who owns that drilling company that I mentioned previously. So very heavily aligned with our shareholders, and some great projects to top it off. We have 4 projects in Nevada. These are our core assets, but we've just recently announced the acquisition of the Robber Gulch project up in southern Idaho. So that is a really interesting gold only open pit type target that is directly comparable to Liberty Gold's Black Pine, for example. Black Pine deposit, same host rocks, similar mineralization, and we're really excited to move that project forward in conjunction with our existing portfolio in Nevada. We have a strong management team holding it all together. I myself, as a geologist, as I mentioned, have led multi-million ounce discoveries in Nevada previously with other companies. Our VP Exploration, Mike Hart, he discovered the North Dark Star deposit for Gold Standard Ventures, one of the highest grade undeveloped open pits in Nevada. On top of that, we have Dwayne Lowe, 20 plus years of experience on the financial side of the business, really great steady hand in keeping Mike and I from spending too much money on drilling here and there, but been a great compliment to the team. On top of that, we have some great directors and advisors. Peter Hardy, CFO of Equinox Gold, Lou Teal and Mac Jackson found over 25 million ounces of gold combined between the two of them in Nevada. And then folks like Jeff Trader, Mike Blady, very strategic capital markets focused directors and advisors that have been a huge help for the company. So what's our strategy for 2022? As I mentioned, we've got a lot of different projects. It looks like a lot of different balls in the air, but it's actually a very focused approach to building shareholder value. And that starts with our flagship project, which is Selena. We're going to be putting over $1.4 million into this project this year. We believe that we're on to a major CRD discovery, and we hope that our spring 5,500 meter drill campaign, which is actually starting in about a month and a half, is going to prove that concept. On top of that, as I mentioned, we have our Swift project, fully funded by Nevada Gold Mines, with a 25% carried interest to Ridgeline on the back end of the deal if they hit all their milestone payments along the way. Then on top of that, as I mentioned, we have Bell Creek. Sorry, my pen quit working. That's unfortunate. It's not working anymore. So anyways, down in the bottom right, Bell Creek and Carlin East, strategic holdings adjacent to existing resources, and then Robber Gulch, which is an emerging district in southern Idaho. All right, so that's our strategy for 2022. I'm going to walk you through our 4 projects first in Nevada. You can see here we have Swift, Bell Creek, Carlin East, and Selena. We're going to walk through Selena first, followed by Swift, and then get into the core assets after that, the strategic holdings. So looking at Selena, it's a 40 square kilometer project. It is a silver, gold, lead, zinc, we believe, carbonate replacement type of deposit, although we hope to fully confirm that this spring. 2021 included some really exciting highlights, including 44 meters of 123 grams silver, 0.1 gold, 1.5% lead, 0.6 zinc, as well as 4.6 meters of 421 grams silver, 0.6 gold, 4.5% lead and 3.7% zinc. So seeing significantly higher grades as we continue drilling west along structural intersections. So you look at this project, you can see here, this is a silver equivalent map. Really what I want to highlight here is we've only tested a very small area. You look at the map in the top right, up here, we've only tested about 10%, maybe 20% of the project area in total over the last year and a half. So what we're doing now is we're going to be focusing on testing to the west towards the Butte Valley Porphyry, which is just off the edge of the screen. And we're going to look at AA prime first. You can see here, this is our conceptual geologic model. You can see our existing deposit and discovery here with the yellow and the orange, the yellow being gold rich, orange being silver, gold, lead, and zinc. This is increasing in grade as we head down dip to the west towards the porphyry, which we believe, this is a porphyry here, we believe that's the main feeder and source for this, hopefully, CRD target sitting right in the center that's yet to be tested. So we're going to be testing that target with 5,500 meters of drilling in the spring. Here's stepping 500 meters to the south. We have a few drill holes. You can see we hit 5 meters of 160 grams silver, 3 meters of 60 grams silver in a completely untested area previously. And then 4 kilometers down dip of that at the old porphyry, we have the historic data showing over 60 meters of 0.1% copper, 0.2 gold, 7 grams silver, and just around 1.5%, 2% lead and zinc combined in the existing drilling in the exact same gray limestone host rock that hosts our discovery. Whoops, making a mess here, folks. Hosts our discovery here up on the hillside. So this is a untested target. We're really excited to come out here. This will be part of our program as well. We're testing I'd say about 700 meters in the north-south and over 3 kilometers in the east-west. So these are wide-spaced scout drill holes going after some high-grade CRD-type intercepts. So we'll see what this program brings in the spring. We're excited to bring that to market. So I just kind of went through what our plan is for the spring, so we don't need to go through this in any great detail. But one thing I do want to point out is we see a lot of similarities to South 32's Taylor deposit in Arizona. Similar zonation style, similar association with the porphyry like we see at Butte Valley, and a shallow oxide silver system at our Salina project, which is very similar to the Hermosa deposit that was originally discovered at Taylor. So a lot of similarities there. We'll see if we can prove that in the spring. So Swift, main thing I want to point out here, this is a massive land package, 75 square kilometers. It's right on trend of some of the biggest mines in the Cortez district. And what partnering with Nevada Gold Mines brought to the table is it really de-risked this project. They're the ones putting $20 million into the project, US, in the first 5 years to earn a 60% stake. And what I really like about the project is if a discovery is made at this stage and they continue to advance through the second earn-in and the development option, the eventual carried interest to Ridgeline is 25%. That means we never have to dilute, write a check again at the project or corporate level to get this project all the way to production. So it's a very valuable project for us. We're really excited to be partnered with Nevada Gold Mines, and we're hoping that they continue to have success here with their drill programs. One thing I really want to point out, they already started drilling the project. So less than 6 months after acquiring this from us, they drilled this hole right here. When you look over to the left, you can just see how close we are to some of the biggest mines in the district. These are all owned by Nevada Gold Mines, and we were able to consolidate this land package and show enough excitement with our drilling in 2020, which showed the Wenban Formation, which is a major host rock, that Barrick came back in, Nevada Gold Mines, and did this deal with us. So they've already completed one hole. We expect additional drilling in 2022, and we hope that they have success. So Bell Creek, small little postage stamp of a project. This is part of our strategic part of our portfolio. We don't have any drilling planned here this year, but we are excited to see how this advances. As you can see, Nevada Gold Mines just put out a 1.2 million ounce resource here at 7.3 grams per ton at the Wren deposit. That's only 500 meters from the edge of our project. And I'll give you a map here to kind of give you a better visual. Here's where the project is located in relation to the Wren deposit. This is our project in yellow. And Nevada Gold Mines and Barrick actually just said that the Wren project represents future growth for the Carlin complex, and that drilling continues on both targets with mineralization open in all directions. This is a very exciting strategic chunk of ground for us. You zoom in on there, and you can see one of the main controlling structures, this guy right here, where you can see all those yellow stars are focused along, that cuts all the way down and to the south towards our project. There's also potential for these controlling structures to continue and carry mineralization out in this direction. So we see this project as excellent leverage in our portfolio. It's very low cost, and we're just going to sit back and let Nevada Gold Mines continue advancing this asset while we move forward some of our cheaper and easier to advance assets. I didn't mention before, the project here is a deep target. It'd be over 1,000 meters deep. These are almost $700,000 to $800,000 drill holes. So we're very careful about how we deploy our capital on this project. Carlin East is a very similar approach at this time. It's 35 square kilometers. You can see right here, it's actually very close to the Bell Creek project. We originally considered it all one project, but we separated them out as Bell Creek is directly adjacent to the Wren deposit, and Carlin East sits only 4 kilometers directly on strike of the North Leeville discovery, which they NGM just announced. Just announced a 700,000 ounce resource at 11.5 grams per ton. So this is considerably higher grade. And if you look at some of the results they've had, they've drilled up to 56 meters at 28 grams per ton at North Leeville. These are incredible targets. We completed 1 drill hole in 2021, which did not drill deep enough to hit our target. Here's what that looks like. And as you can see, we would like to come in and test right here in future years and hopefully go after a similar target to what they're drilling at North Leeville. But that will not be tested this year, strictly because we're trying to focus our energy into Carlin East, or Salina, and potentially Robert Gulch, which we think have incredible upside. So the last project I want to show you is Robert Gulch. This is a new acquisition for us. We just announced it in January of 2022. It's a very low-cost acquisition from our partners at EMX Royalty Corp. And we think that it has significant discovery potential. So I think one thing worth mentioning, historically, there's been up to 12 meters of 0.9 grams per ton gold within 58 meters of 0.34 grams per ton gold starting at surface and oxide. These are very exciting drill results for an early stage project. And there is good evidence to suggest that this thing continues, that this system continues. So one thing I'll point out, this is a very low cost acquisition. $50,000 to exercise the deal to get over $500,000 in historic exploration data. Very minimal work commitment over the first 2 years, only $150,000, and only $1.4 million over the course of 5 years to earn 100% interest in this project, of which $1 million of that is back-end loaded to the final year. So that gives us a lot of time to go out and see whether this thing is worth going after. So some of the things I'll point out, historically, there's been some excellent trenching done on the project, up to 189 meters right here of 0.43 grams per ton, which included 40 meters of 0.88. There's multiple drill holes that have been drilled historically that hit, like I mentioned, that 58 meter intercept of 0.34, 12 meters of 0.65, 6 meters of 1.4, all of this from surface oxide and very weakly tested. So we're excited to go in, hopefully drill some holes potentially in the fall. We'll see how our Salina drill program goes this spring. I think our fall program is going to be very much success-based, whether it's focused at Salina or at Robert Gulch. But we're really excited to see what that looks like. And here's a good example. You can see the schematic cross-section across the project, very weakly tested. The dark blue unit is the main host rock. All the historic drilling in this area never even drilled deep enough to test those host rocks, but did hit gold throughout. We can also see significant rock chips over 2 kilometers to the south and up to 6.5 grams per ton, about 300 meters from known drilling. So there's good potential for high-grade gold at surface. And we'll come out, we'll do some additional work this year, and we hope to see that project really grow. So to finish off, what are some of our near-term catalysts? We're going to be drilling in the spring, Q2, which is actually quickly approaching now. We're going to be drilling 5,500 meters at Salina. We have mapping and CSAMT that we'll be doing later in Q2 at Robert Gulch. And we do anticipate a drill program at Swift with additional news coming out of that project throughout the year. Our Q3 programs are going to be success-based, as I mentioned, and that is entirely focused on whether we have a new discovery at Salina or whether we're moving over to Robert Gulch and seeing how that oxide gold system works. So I like to think that our company has a lot going on, obviously, but we're still trying to stay focused here. We have multiple catalysts at multiple projects, and I think that if you're looking for an investment in the Western US, I think you should give us a look. If you'd like to contact me, please reach out at Chad Peters or cpeters at ridgelineminerals.com or our investor relations team at info at Ridgeline Minerals, or check out our website at ridgelineminerals.com. Thank you.
Hello, everyone, and thank you for joining us at the sixth Spring Conference. My name is Anil Varach, and I'm Executive Vice President and a Director of Step Gold Limited. For those who are new to the story, Step Gold was founded as a private company at the end of 2016 with the aspirations of building Mongolia's premier precious metals company. We had no assets back then. In 2017, we acquired our first two assets, with our leading asset being the ATO project, which we acquired for $20 million US from Centerra Gold. We also acquired our highly prospective exploration license called Urumhundi, or the UK project, in 2017 as well. That's a 14,400 hectare exploration license. In 2018, we listed the company in May 2018 as the only main board mining IPO in 2018. So we raised $25 million in a very tough environment, being the only IPO in the mining space. Over the next 2 years, we actually built our first mine, which is in production today. This is the ATO mine, which we purchased from Centerra Gold for $20 million US. Centerra had previously spent just under $30 million US on the project. They drilled 67,000 meters, 28,000 meters of trenching. Most importantly, they got it fully licensed and permitted for the heap leach that we put into production in April 2020, but also for our phase 2 expansion, which is a CIL plant, a flotation circuit, tailings facility. All of that is fully permitted, but what we chose to do is take a phased approach. Instead of building all of this at once, phase 1 and 2, we built just the heap leach to get started. And so we brought that heap leach mine in production in April 2020, again in a very difficult environment. That was just the beginning of COVID. The world was essentially closed. Mongolia was closed. You couldn't get in the country if you tried. Luckily, we had 100% local team bring production online for the first time ever, and it was a very successful start of production with our local team. In fact, we produced about 15,000 ounces in our first quarter during startup and ramp up in 2020 at an all-in cost of around $730. So a very robust starter project that helps generate a lot of cash flow to fund the growth of our company. So in July 2020, we announced commercial production. We also received an investment from Eric Sprott, $15 million at a price of 2.15. February 2021, we actually doubled our resource. So we bought 1.2 million ounces essentially from Centerra when we bought this project, drilled down to about 350 meters vertically. Today, we stand at about 1.7 million ounces of reserves, and on a resource global basis, about 2.45 million ounces, drilled down to about 400 meters vertical depth. So a lot of room to grow, which I'll get into shortly. In October of last year, we announced our feasibility study, our updated feasibility study on that phase 2 expansion. So as I mentioned, we took a phased approach, focusing on bringing the oxide into production, becoming an employer, a taxpayer, a royalty payer in country, most importantly, generating cash flow that can grow our business. So we announced the feasibility study was quite robust at the end of October 2021. And in fact, we've already started construction on an expansion of that phase 2, which we expect to bring online towards the end of 2023. That'll double our production profile from a circa 50,000 ounces to about 100,000 ounces and added another 10 and a half years of mine life. So it is a larger project that's permitted, and expansion has already started, and we'll have production from the oxides for the next 2 years while we construct phase 2. So it's a nice position to be in, to have production, expansion just around the corner, and still a lot of exploration opportunity on both of our projects. Just 2 weeks after we announced our feasibility study, we received a landmark $65 million US package. So the capex of $130 million US in the feasibility study, we sourced half of the capital and announced that within 2 weeks of the feasibility study. So we do move quickly, and this capital came from within Mongolia. It was actually sponsored by the Bank of Mongolia, $60 million US debt facility for over 3 years, no prepayment options, and it was a great way for us to continue the expansion of phase 2 without waiting for the full project financing package. And our goal is by later this summer to have a fully expanded package that includes all the debt required, and our equity contribution from current cash on hand and cash flow would be the plug there for the 30% equity and 70% debt for the project financing. Today, we have just under 70 million shares outstanding, with a market cap, I guess, embarrassingly low as a producer, but that certainly is the opportunity. Given we listed at $2 a share in 2018 when gold was $1,200, we brought the production online when gold was $1,800. This generates a lot of cash flow. We've added 10 and a half years of mine life, so it's certainly a great opportunity. We have great support from both the management team and locals in Mongolia, as well as some very sophisticated investors. Management and board own 20% of the company today, so we're certainly aligned with our investors. We've only been buying since we went public, and we're in this for the end, until the end. So we're certainly aligned with our investors, both feeling the pain and certainly the gain as the share price moves. We have strong support from family investors around the world. As I mentioned previously, Eric Sprott's an investor at a price higher than even today. Fidelity International has been buying shares on market over the last year and now owns 6% of our company. And Elliott Management and Triple Flag are also strong shareholders. We have 3 banks that cover us today: Hanneman Partners, Stifel GMP, and Haywood Securities. We expect to double that research coverage by the end of this year. So I'm hoping to have 5 to 6 analysts covering our stock by the end of the year. So you're going to see a lot more eyeballs on our story in a very, in a stronger gold environment. Hanneman Partners and Stifel both have targets above $3 on our stock today. So there's a lot of opportunity for growth here and coverage. For anyone new to Mongolia, Mongolia is I guess a newer democracy. Gained independence in the early 90s. It's a functional democracy, home to world-class assets and mines, with the Oyu Tolgoi mine operated by Rio Tinto being one of the top 3 or 4 mines when the expansion is complete in a couple of years. It's home to world-class discoveries and tier 1 assets and mines that can be built. So certainly you can do big things here, and that's what STEP's focuses in the precious metal side. We think there's more discoveries to be made, more mines to be built, and we want to be the platform for precious metals. So a lot of opportunity here. You have a functional democracy, pro-mining, pro-foreign investment government, and I guess we're one of the first movers, I guess, in this new regime. Our board and management team, very strong. We are considered a local company. Mongolian CEO, half our board is Mongolian, and as I mentioned earlier, 99% of our staff are Mongolian. So we always consider ourselves a Mongolian company listed on the TSX. As in any jurisdiction, you should be as local as possible, and we certainly did that from the outset. Matt Wood, our executive chairman, a geologist by trade, and Bata Timur Osher, our CEO, have worked together in Mongolia for over 12 years now. They actually built another company called Hunu Coal. In 2010, that was a $20 million IPO. 2011, that was a $500 million cash sale. So there's a track record of execution in country. We certainly know how to navigate. And in fact, we have a lot of support in country, given the Bank of Mongolia facility we received in 2 weeks after a feasibility study. We actually received $3 million of capital from the Sovereign Fund 2 years ago too, as well. Their first ever investment or capital investment into a mining company. So we certainly have the support at all levels, locally, provincially, federally. We do things properly. We employ locally. We've done we made a lot of efforts right from day one. Before construction started, on the social aspect, creating scholarship programs, environmental. We are leading one of the leading companies in Mongolia with those efforts. Real quickly, this is what the ATO project looks like. When we bought this project, it was only ATO 1, 2, and 4. They look like carrot-like pressure pipes. ATO 4, we proved the model wrong, and we doubled the resource. In fact, so that's when we came up with the resource report. It was from the extension of ATO 4, as well as a maiden resource on the Mung discovery. Mung means silver in Mongolian. It's a new discovery that today has about 440,000 ounces. Not really any oxides, maybe about 20,000 ounces of oxides at surface. And the remaining is the fresh ore for phase 2, our phase 2 expansion. And in fact, the phase 2 expansion, where we added 10 and a half years of mine life, only includes 1 million ton of the 9 million tons that exist at Mung. So there's a lot of room to grow our mine life, our production profile for phase 2 through exploration along the trend north of Mung, further drilling on Mung, ATO 4 at depth, ATO 1 and 2 at depth as well, where we think there's new discoveries and opportunities for extension. So, we barely scratched the surface. With limited capital for exploration, we focus on extensional drilling in ATO 4 and infill drilling on Mung as part of the latest resource update. We do think the scale potential exists. This could be a 3 to 5 million ounce footprint on our mining license. When you go just north of Mongolia to Russia, you have large deposits very similar to ours, 100 kilometers north, 150 kilometers north, that are 5 million ounces and 10 million ounces plus and in production. So certainly the scale potential exists. And now we have through our cash flow, we can fund exploration on this project while we add that additional 10 and a half years mine life in short order. Really quickly on the feasibility study that we put out. So this is based on, as I mentioned, just a very small part of Mung and ATO 1, 2, and 4. CapEx came in at about 130 million US. All-in costs, 853 US. NPV of 232 million, and you can see very strong cash flows. This has a lot of room for optimization, both from adding more resources to the mine plan. We think the 10 and a half years can easily become, can grow by the time we bring production online in a couple of years from phase 2. The power upgrade to the grid power upgrade will have significant savings to our OPEX in the future years. So you'll save about $10 million a year, which means our all-in cost should come down closer to about 750 when we bring phase 2 online. In terms of CapEx optimization, there's further studies being done. And obviously we're looking at many ways to optimize this expansion project. So it's a nice, robust project that's permitted and coming online over the next 2 years, while you have at surface of ATO 1, 2, and 4 the oxide mine that goes down to about 40 meters. And we expect to produce about 100,000 ounces over the next 2 years from the oxide mine at about all-in costs of $650. So a lot of cash flow generated from the oxide mine that allows for the equity plug into the project financing for phase 2, allows us to have fully funded exploration programs on both projects. This is what the site looks like today. You can see the crusher for phase 2 right here in the middle is already being installed, and in Q2 it should be fully commissioned. This is a 1,000-ton per day crusher that we can actually use in phase 1. So we can continue to increase our oxide mining, crushing rate, and we also believe stacking and processing rate. But the market should expect at least 50,000 ounces over the next 12 months at all-in cost, and hopefully we can grow that. We've certainly been able to increase our inventory in the last few months, 6 to 9 months. So really quickly, our second project in the southwest of the country is called the Udamhundi project. This is the UK project in the blue with the gold outlines. So this is an undrilled license, 14,400 hectare license that we acquired back in 2017, along with the ATO project. We have never had a chance to drill this to date, and we expect to hopefully in the next couple of months get out there and drill our 4 discoveries outlined there in the gold. But what's really exciting is this is a highly prospective new gold district. The white boxes to the north and south are held by Erdene Resources. They've had a tremendous success in the last few years on exploration on both properties, and we're smack in the middle. They have just over 1 million ounces between the 2 properties, a mining license on the property to the south. They even put out a feasibility study on that project, I think a couple of years ago as well. So there's a chance that they bring production online in the coming years, and we have a large exploration license smack in the middle. Early stage work there. We've done the IP, magnetic soil sampling, and even trenching have resulted into some very exciting results. Right from surface, you can see 1.5 grams gold, 450 grams silver, 3% copper, 4% lead, essentially. So highly prospective exploration license that we're getting zero value for today in our stock. We haven't drilled it, but you have a company like Erdene that's about 130 Canadian market cap surrounded by us. So certainly an opportunity. We think that could be another production center for STEP in the future. So this is where our exploration funds will be spent as well. About 10,000 meter budget down here this year that could double the 20,000 meters on success this summer. So very exciting in terms of news flow with exploration on both properties, production and cash flow from the ATO mine, and then of course further expansion on phase 2, both from the debt piece, from construction and earthworks, and I think it's a quite exciting story. I've already covered the social side and environmental side. We're doing a lot of great things in the country, and we're very proud of that. Very, very proud of what we've achieved and what we continue to do. ESG is not something that's mandated by us. It's something we started the company with. Right, this is what we do. No one needs to ask us to do these things. We did this from day one in 2017, and we'll continue to grow as our production and cash flow grows. In sum, we have lots of cash flow, lots of catalysts in the near future, with production back online and gold price much higher. We're going to have some strong cash flow. We've built up an inventory over the last 6 to 9 months, which allows us to hit the ground running. As we started leaching this month, we have enough ounces actually to produce what we wanted this year and even some of next year. So there's the ROM pad balance. You have the leach pad, what's stacked on the leach pad, on the ROM pad, and even in this pit you see here that's already blasted. We have about 81,000 ounces on a recovered basis between all those three piles, I guess. And about $1,800 gold. That's a significant amount of revenue and cash flow to us. So a strong cash flow build up in the coming months. Exploration starting on both properties in the coming months. Further refinement to the financing package on the debt package to be fully funded for phase 2 expansion. And potentially listings in Asia as well. So that is the step story in a nutshell. And I look